This on refinancing concerns, so we'll see what happens there. But equity markets in Europe are now open. Let's take a look at some numbers, give you an idea of what is going on. FTSE 100 expected to open pretty much unchanged. There we go, absolutely unchanged. Little tick higher after a little tick lower, but there's nothing really to read across here. So then we get into the single stock narrative, and we'll see what works there. Nordea also out with numbers. It looks like it's going to be a bit soft this morning. I'm just seeing things settling down. I've yet to see a price on Atos. We'll get that in just a moment. UniCredit as well to watch.
Yeah, if you're also, again, I'm looking just kind of a sectoral basis. You're already seeing some of the outperformers of last week. The energy story, the healthcare story, they are your underperformers in terms of weights on the index today, which again, I think speaks to your point that this is more of a single stock story. It's a positioning story. There isn't a macro narrative just yet, which means you're kind of treading water when you see this kind of sector leadership just transition from name to name. But if you look at some of the worst kind of, again, weights on this index, you've got Santander is lagging. You've got Nordea Bank. You've got some of the banks. But again, the energy names aren't doing well either.
No, which is interesting too. We're going to get BP numbers out later on this week. Watches of Switzerland is actually tracking a little bit higher. I wonder whether that's the sort of consumer story out of the United States, the fact that we've got such a strong labour market story and stock markets continue to push higher. So I wonder whether there's a narrative there. Nordea is a little softer. As I say, I'm yet to see a price on Atos. I've yet to see a price. It looks like Atos has been halted. So the circuit breakers are kicking in a little bit there. So that stock looks like it's being halted at this point. We'll try and get a price for you fairly soon on what's happening with Atos. This is, again, this just speaks to the divergence.
Yeah.
The winners maybe get stronger here, and that's certainly what we're seeing in the United States. You see the tech story and how that continues to develop. But the weaker stocks continue to be punished hard. That kind of narrative, that divergence within the market is still there.
Yeah.
The thing is, though, that at the moment, you look at volatility, still very low. So basically, you've got almost as many good stocks as bad stocks, which means that the index basically goes nowhere.
It does, but then you've got your heavyweights as well. ASML, for example, it's in some major leadership there. We've got the ex-dividend story that's helped driving that stock, but still higher by only 0.6%. We saw more outperformance last week than we did this week. But again, to your point of this divergence in terms of sectors, we're seeing divergence in terms of banks as well. Not all banks are created equal in this environment, despite the fact that we did get good numbers out of UniCredit. We're potentially getting a good numbers out of UBS as well. SocGen, for example, talking about cutting some staff as well.
Yep.
Is the banking story in Europe similar to the tech story in the United States, where layoffs equals cost efficiency equals stock rally?
I don't know. It's going to be... There's so many other macro drivers that come in to the banking sector. I think you need to... Is the rate story more important than the cost-cutting story? If rates stay higher for longer, how does that affect what happens with net interest income? How does that affect the issues surrounding whether or not we're going to be seeing provisioning? So I think it's a really difficult one to judge. I think within the market, it's a single stock story. The bigger kind of market picture continues to be, though, what is happening with the central banks and what's happening with the Fed, what's happening with the ECB. Larry Summers, Mohamed El-Erian, two fantastic people that you want to hear from to get their take on what is happening in this environment. This is what they had to say back end of last week on the back of what we've seen with this data. And obviously, we need to factor in what's happening with Powell.
The fact that the recession risk is looking more and more remote, and that, today's wage number came in very strong. All of that makes me think that we still do need to be quite concerned about inflation. I think the Fed did the right thing by taking March off the table.
March should have been off the table for a while, as you and I have discussed, but this means March is off the table. It also means that you are more likely to get the 3 cuts that the Fed has signaled, 3 to 4, rather than the higher number that the markets has been romancing.
Mr. Summers, Mr. El-Erian, giving their take on what is happening here. Let's get another view on what is going on here. Geraldine Sundstrom, as Asset Allocation Portfolio Manager, joining us from PIMCO. Geraldine, let me ask the question that I've been asking everybody this morning. How much of a game changer was that Friday payroll? What does it mean for equities on both sides of the Atlantic?
Well, it certainly put a nail in the coffin of March, unless there was to be a really big surprise between now and then. In terms of equities, so far, the market has decided to shrug it. There seemed to be this really Goldilocks scenario where the economy remains strong, and inflation is going down. And inflation is really a supply side story, is not a demand side story. And this is good for the stock market. It's really a question. I think it's the supply stupid, and the market really likes that.
What do I shift the stocks that I want to own though? In an economy, maybe it's just a US economy, but an economy that looks like it's re-accelerating. Do I need to pivot back to the cyclicals? Do I need to change what my mix looks like? Do I need to think about what is happening with the energy story a little bit more? Or do I simply just carry on allocating towards big tech?
Well, what seems to be happening is really those sectors where supply is in overcapacity, where we see this big deflation, price falling in terms of good very often, where China is a big supplier. Those industry are struggling, profits are coming down, and then those areas that are much more shielded, maybe more in the service sector or in the tech industry, where competition is not that rife, those companies sees their profit to be pretty isolated.
Geraldine Iscredi in London, let's talk a little bit about the liquidity picture. You're talking about, I love that, it's supply stupid at the end of the day. You're talking about that for the stock market, the bond market as well. Where are the liquidity cracks going to potentially emerge if they haven't already?
Well, we're seeing, of course, all the interest rate sensitive sectors are having a bit of a harder time. It's very well known. The housing market is very slow. The longer interest rates stay high, the maturities coming, rollover due, it makes the situation potentially more complicated. So this will have to be weighed, but it seems that central banks nevertheless are going to cut interest rates because inflation is coming down for the good reasons, and this should ease the situation.
But when you talk then about this interest rate story, and I think it's interesting that you mentioned the China piece of the equation. Guy and I were talking about this earlier in the show, that as we start to see the kind of exposure to China really plummet from international investors, who picks that up? Where do you think the trade-off is? If not China, then who?
Well, it will be a market mostly driven by local participants, I suppose, at the end of the day, if this trend continues. And I think by now and large, it's about the local investors. So these local investors need to regain positive sentiment. So far hasn't happened because the economy is still very sluggish and really suffers from deflationary pressure, which are not very good news for most businesses.
Feels like the China story is really isolated, though, at the moment from an equity point of view. The big take this morning, though, that I'm trying to figure out is what happens if we don't get rate cuts? Geraldine's talking about the fact that we are going to get rate cuts, but Mark Cudmore earlier on was talking about the fact that we're going to kind of push those out and out and out.
Yeah.
So how does the equity market react to that?
Well, I guess they have to still watch for kind of the surface level bond market moves, because you're talking about this repricing in the bond market. But if you look at the surface level story, it's still range bound, which means that's affecting borrowing rates for corporates, which affects their stock price, which isn't really moving because, again, the surface level, nothing's moved. So the answer is nothing yet. Nothing yet.
Geraldine, what do you think global equity markets will look like if the US 10-year trades back up to 4.5?
That's not good news, of course, especially for most interest rate sensitive sectors that are longer duration. Quality should still be doing relatively well. We're seeing growth still pretty strong. Really, the stock market has to weigh the two things. How earnings growth developing. We see a lot of things in the ISM, PMIs seem to be stabilizing, re-accelerating. We're seeing numbers above 50 once again. This is going to be taken very positively by the stock market. On the other hand, of course, you've got the discount factor going higher. So I think overall it could be pretty neutral. Then if we do get some interest rate cut, maybe only 3 or 4 instead of the 5 or 6 that the market has been pricing, it's still helping at the margin and could reinvigorate capital expenditure cycle, which has been in large part delayed in many sectors. That's what we're reading from companies' transcripts, because interest rates are still viewed as too high. And there were fears of a recession, which are now decreasing.
Well, Geraldine, to build on Guy's point, though, we're looking at 408 on the 10-year yield right now. 4.5 really shocks the stock market as you lay out. How high can yields go before it starts to make equity investors nervous? What is the ceiling there?
Well, we saw very well last year that around 5% makes things a lot harder. I suppose that would. There's no real reason to see it going there unless we had a genuine reacceleration of inflation or something that really pushes central bank outside the base case scenario, in which case the market would then be back fearing a hard landing, and equities might not fare very well either. So as long as we stay within a range, things should be fine. If we go to extreme, of course, anything can happen.
Okay, Geraldine, the payroll number of Friday was the catalyst that maybe takes us in that direction, though. What is the catalyst this week? What are the highlights you're looking for? What are you watching for this week?
We're going to get ISM and PMIs around the services. This is going to be important. We're going to have to look at more earnings, especially as we go away from the US. The US is giving us a lot. Now we need to see the situation in Europe and the rest of the world. But now, I suppose the most important thing would be to watch all these inflation data and how they are coming around the world and see this continuous disinflation. Anything that would point to a resurgence of inflation, like we see, might be a reacceleration of the economy, that might be unsettling.
All right, Geraldine Sundstrom, Asset Allocation Portfolio Manager over at PIMCO. We thank you so much. And look, we're talking a lot about the Federal Reserve, we're talking a lot about the macro. We'll, of course, be speaking to the Chicago Fed President, Austin Goolsbee. That conversation happening at about 3 p.m. London time, 10 a.m. in New York, 11 p.m. in Hong Kong, if you are still awake. In the meantime, let's go from the macro to the micro, get a quick check on some of the individual stocks on the move. Joe Easton is all over that story. Joe?
So we take a look at these banking stocks. There's only one place to start. UniCredit up around 7.8% now in Milan, returning 10 billion euros worth of cash to investors over the next year as Andrea Orcel continues to cut costs at the Italian lender. But then we've got Nordea Bank coming down around 4% over in Helsinki and also in Stockholm. Trading revenue is weak, wealth management revenue weak as well, according to analysts, and that's what's weighing on those ones. But the two sticking out to me are Lloyds and Santander. They are towards the bottom of the Stock 600 movers today following this report in the Financial Times around Iran and around the potential use of bank accounts in the UK, so based here, but with these companies potentially using that to move Iranian money. Concern around that clearly spooking the market. I wasn't expecting to see as much of a decline in those. Lloyds coming up a bit, but Santander down 2% in Madrid at the moment. Then we'll flip over and have a look at a couple of the other stocks on the move. Now, Delivery Hero tanked on Friday. It was down 23% on worries about a potential sale of a unit over in Singapore that was potentially going to collapse. They've denied that. They've also reiterated their financial guidance today, so that one is up 5%. Then Vodafone coming down around 1%. It was a beat on the headline, but Italian and Spanish results weak on both of those lines. UK not doing too bad, but clearly not making up for it in terms of that move. And we are seeing Vodafone down. We've brought up Nokia as well because they've resolved a patent dispute with Vivo over in Asia. That's been a big overhang on that stock, so we've thrown that one in there as well. That one gaining 1%, 1.2% at the moment. But we'll have a look at Atos because this one absolutely falling off a cliff this morning, down 17% at the moment. Speaking to banks about their debt outlook, speaking to banks around financing, cancelling a rights issue. Rights issues are usually dilutive, so it's negative. But where does it leave them now? Where are they going to get this money from? So that one is tanking. It is a cybersecurity company based over in France, down 17%. An awful day for that stock. Then just a couple of looks at the ratings changes, my favourite part of the morning, the ones that stuck out to me. Adidas is an outperform at RBC Capital. They say expectations have been reset following that weak report from the company. The ghost of Kanye West still weighing on that stock at the moment. It is up 2% this morning. And finally, Land Securities. Morgan Stanley says the decade of lost shareholder returns for UK real estate is over as yields start to come down over the next year. And that one is raised to overweight and up 1.7% this morning.
Joe, great stuff. Thank you very much indeed, Joe, running us through much of the stock story that we're watching, Critty. Looks like utilities having a good day as well.
Utilities are having a great day, and National Grid in particular is one of your biggest index contributors this morning, which I find kind of strange because it kind of seems like it's just on an analyst upgrade. They're basically saying that it looks like Jefferies in particular kind of giving it their stamp of approval, saying that the power transmission and distribution company looks set to deliver pretty highly attractive growth on both sides of the Atlantic. They're also saying the valuation really supports it. That alone driving the index.
So it's interesting. Is there a macro story there as well? You could. This is a sector that's been beaten up. Because it's already priced in the higher rate story. Is that one area you therefore maybe look at and say we've already priced in a lot of the bad news? Maybe we can start to see a pop from here. I don't know, but maybe sometimes all you need is a little catalyst to maybe get people a little bit more interested in that. But in theory, you would have thought higher yields, utilities don't necessarily go hand in hand.
Yeah, well, in today's trade, it seems like they do. Let's talk a little bit about the banking sector, because your biggest index contributor this morning is the UniCredit story. This is enormous. It's making up 15% of the move to the positive direction, 8% on the back of some of these numbers. But at its core, I'm curious how much of this is rewarding the fundamental story versus getting on board with the buybacks, getting on board with the dividends. They are really doing everything they can to kind of sweeten the pot here.
Well, compare and contrast UniCredit with Meta. I know it's a little bit of a stretch, but you think about why Meta did so well on Friday. It's kind of ticking all the boxes, isn't it?
Yeah.
And in some ways, this is the same story. You're getting a decent return for investors. You've got a good narrative going forward from here. Maybe therefore you get these kind of outsized returns on the back of that. But Meta's kind of emblematic of that trade at the moment.
All right. Well, I mean, I compared Boeing to Apple last week, and today he does Meta and UniCredit, taking a page out of the Krita Gupta playbook. It's fine. We'll go with it. Coming up on the program, we dig deeper into some of these bank earnings. We're going to dive more. UniCredit, again, as he mentioned, surging 8%. Nordea, on the other hand, disappointing. It is down almost 5% on the day. More on that later. Stick with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
multi-trillion dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Minutes to trade. European equities are largely bid. There's a few single stocks that stand out. The bond market is where you could argue the action is this morning. US 10-year up another 6 basis points. You've got European bonds up 4, 5, 6 basis points pretty much across the piece. So that's the kind of the macro story. The single stock story this morning very much focused on what is happening with the banking sector. We'll talk about Atos a little bit later on. But UniCredit, profit-beating estimates. The board basically allowing the bank to boost shareholder return on its 2023 earnings to 8.6 billion euros. That is an epically large number. Basically, it's 100% of net income. The net income line comes through at almost triple analyst forecasts. Let's dig into this. We'll talk about Nordea. We need to talk about UBS as well. Tom Metcalf joins us. Let's start off with what Rothschild is doing. These are sensational numbers. I've said that word again.
You have. I suggested earlier that we do a drinking game. Every time Guy says sensational,
I don't know what it's in my head today. It's in my head today. But these are very, very strong numbers, and they're kicking back an awful lot of money to shareholders. Is the underlying picture really this good? The stock price market reaction this morning is really good.
Yeah, well, I think they are delivering. Basically, Rothschild is going out there and painting a very simple, straightforward picture is I will make sure I sort of maximise out payouts and operationally we're taking the steps needed to make sure we can continue doing this. So as you'd expect, shareholders are absolutely loving this story right now, up, 8-9% today? Yep. I took a look over the past year. The shares are up, nearly 50% for a bank. Yeah. Extraordinary. So he's certainly making an impact. Sensational, sorry, exactly.
You can't say it anymore. We don't have the shots. Anyways, let me give you a fun fact here. Our producer, Dan Curtis, just flagging this to us. UniCredit has a 61% total annualized return since Rothschild took over nearly 3 years ago. That is a massive margin, but I'm curious if this is the wisest decision. Is this the way to spend the money when a lot of income is a function of these higher rates? Is it fair to kind of give it out at the moment, basically, to your shareholders?
Well, that's the thing. Everyone knows this rate cycle is coming to an end. UniCredit has, ridden it really well and seems very optimistic as well. I mean, their provisions as well came in, I think, under estimates. So look, from their point of view, there's no warning signs, but that's the big question is, there's no going back on this, and then what happens if times do get tougher? So, but for now, Rothschild is following this route, and he's, taking no prisoners.
The big event this week in the banking sector is on Bahnhofstrasse, UBS tomorrow. I was there for the last set of earnings. They were a wait-and-see set of earnings. We now get to see. What are we going to see tomorrow in terms of this 3-year plan?
Well, I think, this is sort of the big set piece now. It's the year end. They've had plenty of time to kind of take a look at Credit Suisse. So I think, well, as we were discussing, what shareholders are really looking for is no surprises. The plan is a 3-year plan, and they want to see progress on that. And hopefully maybe ahead of expectations in terms of, here's where we are on cost. No, the main thing though is no sort of skeletons coming out of perhaps what they've bought, because that will inevitably sort of dampen the sort of pretty exuberant mood or sensational mood around UBS.
Oh, now he's got you doing it too. All right. Before you know it, everyone's going to say sensational. Tom Metcalf, we thank you so much for that update. He's, of course, our finance and investing manager for this region. But again, to his point, at its core, it is a interest rate story, and it's not just one that's here in Europe. It's in Turkey as well. Turkish monthly inflation has jumped the most since August, an upswing that could test the central bank's resolve to get a grip on the issue very, very quickly. Joining us now for more on this, Ziad Daoud, Chief Emerging Markets Economist for Bloomberg Economics. Ziad, a pleasure to have you on the program. Why is inflation still at 65%? Explain that to us.
Well, it's a 65% despite the central bank raising interest rates significantly over the last 6 or 7 months. And there are 3 reasons for this. One of them is the currency. The Turkish lira is the second worst performing currency in emerging markets. And when you have a weaker currency, that means higher import prices and higher inflation. The second reason is fiscal policy. The government is spending, is cutting taxes, it's got elections, local elections in March, and that's another driver for inflation. And the third reason is inflation expectations. So in the past, when inflation was so high, the central bank didn't use to raise interest rates. And that basically fed into inflation expectations. And if people expect higher prices do come because people price higher prices in their wages and in their products. Yep. So for all these reasons, inflation is 65%.
Ziad, there was some concern when we saw the central bank governor departing, Erkan departing, that we could see we were back to the turbulence, that we were back to Erdogan's non-normal approach to monetary policy. We've got a new central bank governor coming in, Fatih Karahan, sorry, I'll get my pronunciation, I hope, right. I may have mispronounced that. Is the market comfortable that Erdogan is still on board with these higher rates?
I think, yes. The news was obviously on Friday was sensational, but there is a difference this time around. It's familiar because in the past we've had 5 central bank governors in Turkey that have left before the end of the term since 2019. But this time is different. First, it was a resignation by the former governor rather than a sacking. Second, she resigned for personal reasons rather than policy reasons. And the third reason is the pivot that we've had in Turkey since May was not just a new central bank governor, it's the whole economic policy team. And the most important person in that economic policy team is the Minister of Finance, Mehmet Şimşek, and he's still very much in place. So unlike the previous 4 episodes, investors shouldn't be worried this time around because policy continuity will remain in Turkey.
It's certainly something we're going to be watching in terms of how much exposure is even left in Turkey and how much more people actually want. Ziad Daoud, he is indeed sensational. Chief Emerging Markets Economist from Bloomberg Economics, we thank you so much. This is, again, a really interesting dynamic. We continue to see it play out in the Middle East. And Turkey is just a fascinating story in terms of also the role that they play in terms of the geopolitics as well.
Yeah, right at the heart of so much of the story that we're watching in the Middle East right now. We've seen further attacks over the weekend on the Houthis. That Red Sea story is still absolutely relevant right now. And again, it's interesting, you talked about this right at the beginning of the show. Powell was talking about geopolitical risks. He mentioned that in the CBS interview.
Yeah, he said it's the #1 risk there. We're going to dive into what that actually looks like next. Stick with us. We're coming up ahead. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
is on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Markets Today. We're about 30 minutes into the European trading day. We are seeing the stock 600 higher by about 0.2%, kind of a sanguine day. A lot of the focus is on the corporate story. But when we talk about the macro guy, we talk a lot about the interest rate story, of course, the Federal Reserve story, what Jay Powell had said over the weekend, which wasn't really that different from what he said in the past when it comes to interest rates. But to me, and you said this earlier, it's the fact that he's saying geopolitical risk that is the biggest issue here. Over the same weekend, we had President Trump talk about 60% or more tariffs on China. So with Trump 2.0, already we know what that might actually look like. So geopolitics is coming front and center, but it's not all one region. You've got the Iran story on oil. You've got, of course, the Middle East, and then you have China tensions. Pick your poison.
There's a lot to kind of plug in, isn't there? And you think about it from Powell's point of view, he's got an economy that's doing all right. He's ticking the box on the labour market side of his mandate. Therefore, the risk is around the inflation, and any aspect that maybe increases that, therefore has, I think, a disproportionate effect on what ultimately he's going to do next. So the Red Sea is absolutely massive in all of this, more so for Europe, I think, but certainly a factor for Europe.
Well, the risk absolutely, and the risk, I think, to the entire world is oil prices, right, at its core, but also then you have the geopolitics and between Ukraine and Russia as well, and the war there, and the impact on grain prices. And I think one of the core concerns about kind of upping of inflation, it comes from the commodity sector in particular. But then if you look at the kind of the base level prices here, Brent crude is at a 77 handle, despite the regional tensions escalating.
The US is throwing so much. Look at the numbers from Friday. Look at Chevron. Look at what Mike Wirth had to say. The US is kicking out a lot of oil right now.
#1 oil exporter, right?
Well, precisely. So this is in some ways offsetting all of the other risks that are out there. That huge, stable producer in the market at the moment. I think if you were to see trouble in the Straits of Hormuz, then that changes the narrative.
Right.
But at the moment, I think that plus the fact that China continues to be very weak in terms of what its economy is looking like, it's keeping it suppressed.
Not to mention negotiations coming out with Venezuela, some more supply there as well, Guyana as well. And then you have Iranian barrels potentially hitting the market, not going to the United States, but perhaps to other countries around the world. And on top of that, you have the voyage times. I think that's the part that isn't being priced in. Bloomberg Economics, our trade analysts, had actively said that if this is an issue that lasts months, then you'll see a read-through into the eco story. We're hitting months.
We are potentially, So, and you're certainly seeing that in the consumer goods companies. They're talking about it actively. There was an interesting story I read on the way in this morning talking about the fact that UK companies are saying that they have still yet to fully pass on the price increases they're seeing in energy. So back to this energy story to consumers. So basically, we've still got to raise prices to cover our costs on what is happening with the energy uplift that we've seen. Now, that's particularly present in Germany, but it's interesting that the UK is talking about that. So there's still an inflationary effect that is still coming through that the Bank of England is going to have to think about on the goods side of things, and maybe on the services side of things as well. That energy story still has the potential to give an uplift to energy, despite the fact that inflation has been coming down.
And that's just at Brent crude at a 77 handle. Then you've got kind of the worst case scenario. We kind of played doomsday on the bond market in particular when we said yields, what if they hit 4.5% or 5%, for example? Let's play doomsday with oil, where what if oil hits 90, 100, then do you start to see more panic in Chair Powell's voice at a time, by the way, the Federal Reserve has never hiked rates in the face of a war or geopolitical conflict. So if you start to see those pressures, how does the chair react?
And that's something that consumers see really quickly. So if you think about the latest University of Michigan data, the consumer is starting to react much more positively to the belief that inflation is coming down. The biggest indicator that the consumers have is what they see at the gas station. Because the numbers are always there. The numbers are up in big lights, and you can always see whether they're going up. Every time I drive past a petrol station, I can tell, is that one expensive, is that one cheap? And you get a kind of feel for what is happening in terms of overall prices.
How much does a gallon of gas go for here, or petrol?
A gallon, a huge.
Oh, I forgot.
So the story of it, in some ways you get less volatility over here because there's so much taxation involved. So you tend to get less volatility because the tax acts as a kind of counterweight to that, but significantly more expensive.
So what is it? A liter? Is that what it goes by?
Yes, we do leasing.
So what's the pricing?
A nice easy. I can't do the calculation but I think probably 3-4 times the price that you guys pay.
3-4 times the price. Oh my gosh! All right. Well, I think gas is supposed to be like $3 a gallon or something in the United States. And
that's why you guys get to drive big cars. Did you see the story out of Paris over the weekend? They're basically to park an SUV in Paris now.
Yes, they're increasing
significantly more money because everybody's now driving SUVs in Paris, which isn't really built for SUVs.
But this is the conversation we actually had last week with Jim Rowan, right? We of Volvo Cars, the CEO there, and we said, how do you make your vehicle more affordable at a time when nobody wants to actually pay up for being green? And that is a story of being cost efficient, and it's still cheaper and therefore easier, and therefore the infrastructure supports it to be a gas guzzling American driver with a big SUV. And that does not appeal on this side of the Atlantic because it's actually expensive to do that here.
There's still a huge amount of SUVs on the roads, and the electric ones now weigh so much. They're well over 2 tons. So some of these cars are absolutely huge, both in terms of size and weight.
I mean, I have so many questions about this.
You're from Texas. You love, big cars have got to be a thing, right?
You have a big car.
Pickup truck.
You drive 80, 100 miles an hour on a very wide highway. It's like bliss. It's like Formula One, NASCAR. It's in our blood. Regardless, at its core, in the Texas story, in the domestic story, in the political story around the world, oil prices are at the core of it, and that's where a lot of the concern lies when it comes to the inflationary story. And then you factor in the geopolitics, as we were talking about as well. That's where I want to go next. Attacks on those commercial ships in the Red Sea, prompting companies to test ambitious new land routes through the heart of the region. But you look at one proposed route, a great chart there. It's going to take goods from India, the UAE, and Bahrain through Saudi Arabia and Jordan, and then on to Israel and Europe. I want to get a little bit more on this. It seems like a complicated proposal, but it might just work. Bloomberg's Alyssa Odenheimer joins us from Tel Aviv to explain it all. Alyssa, who is actually going to be using these routes?
Hi, Critty. Well, there's shippers that are already using the routes, companies in Asia that want to get their products to Europe without having to go through the areas where the Houthis have been attacking. And also there's been a bit of traffic the other way too, with companies in Europe that want to send goods back to Asia.
Is this now being accelerated as a result of what is happening in the Red Sea? What's the timeline here?
Yes, absolutely. Well, this is a scrappy little Israeli startup called TruckNet that had software to optimize trucking routes. Apparently, many trucks all over the world travel empty, and this company was formed with the idea of optimizing software to match empty space with goods. And even before the Houthi attacks, they had the idea of starting this route because, 3 years ago, the Abraham Accords were signed. Before that, you could not possibly have shipments from the UAE to Israel directly. There weren't relations. But since the Abraham Accords were signed, then this idea became feasible. And this company had already signed agreements with companies in the UAE and in Bahrain, with logistics companies, and they had actually started even doing pilots. But when the Houthi attacks started, then they said, let's hurry up and get this rolling. And in November, they started actually test drives, and in December they started shipping.
Alyssa, shipping is a business that runs on volume, and that has been the concern here. As you go around the Cape of Good Hope, it increases 40% in voyage time, it increases more labor, more fuel, but you just can't transport that amount on land, or at least it hasn't been proven yet. What are the implications here?
Yeah, absolutely, you're right. This is for shipping small amounts, and TruckNet, this tiny little software company, is the first to say that this isn't going to solve the Houthi problem, because we're talking about small shipments. However, if there are companies that want to get their goods quickly from Asia to Europe, this is a route that from the UAE to Israel takes 4 days. From Bahrain to Israel takes 2 days. and it's working, and it's working. You see Emirati, you see a long a string of Emirati trucks waiting at the crossing between Jordan and Israel to get into Israel and get the goods to the Haifa port and from there to Europe. And I think that what this says is that the bigger idea that was touted already in September of having rail links on this route is feasible, and maybe we're going to see that one day.
Alicia, great story. Everybody's reading it. Thank you very much indeed. Alicia Odenheimer joining us out of Tel Aviv. Coming up, we're going to turn to potentially another way of improving productivity. German companies are testing out a 4-day work week. We're going to check out this experiment next. What impacts is it going to have? We'll also recap on these markets. We're seeing a big move at the front end of the US curve. We'll recap that in just a moment. This is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow
Who's in a bad mood about being conservative? Is that because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that.
it.
Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks.
That was, of course, the Fed Chair Jerome Powell talking on 60 Minutes yesterday. It was an interview that was recorded Thursday. Payrolls come out on Friday. I'm assuming that he saw them. Clearly, we're seeing a big move, though, a continuation of reaction. So Friday, you get a big reaction to the payrolls.
Yeah.
Now you're getting a reaction to Powell, I think. Cumulatively, we're up, I don't know, 20, 25 basis points now, maybe more, nearer 30 basis points in terms of the move that we're seeing on the front year. It's interesting that we're seeing a continuation, though. Powell has again maybe moved the dial a little bit more.
He has, but look, some of this I'm also wondering is how much is kind of positioning getting shaken out here, because there was just this kind of rush for bonds, and we talked about this with Bob Michael, for example, over at JP Morgan Asset Management. He's this head of fixed income there, talking about how there's this insatiable demand for bonds, or there has been at least in the last couple of months.
Was that a mistake to buy though?
Well, now it's being unwound, it seems, in a pretty enormous fashion. These margins are enormous here. But, I mean, 409 on the 10-year, though, if you actually look at, I'm just looking at a kind of even a one-year chart here, you're still not hitting the top of the range that it's been in. The top of the range here hits like 417, 419.
On a 2-year, you're up on a 3-month basis to over 5%. So the 2-year's potentially still got quite a long way to travel. If you price out 75 basis points from this year, say you actually just go with what the dots are saying, which is 75.
Yeah.
And then the risk is that maybe if this data continues, you price out some of that. So the curve's going to shift significantly.
Yeah.
If we do see some of that being priced, there's potentially big bond market moves kind of in isolation, but then there's a big curve move as well.
Yeah, there is, and again, it speaks to the idea of, I mean, how sustainable is this really, and the fact that we're even talking about 4.5%, even 5% with Geraldine. She's saying it's not their base case, but something that would rock the market. That's something we haven't talked about in months,
a while.
Which I think really speaks to the sentiment you're seeing right now. Of course, it's going to be something we explore throughout the week as we kind of monitor some of the other data points that we're getting. Today, we get the OECD preliminary report, plus that PMI and PPI data on those Euro area global services. On Tuesday, it's all about the BOE's quarterly report, as well as Euro area retail sales as well. Wednesday, the data party continues. Germany and Spain, industrial production numbers, and that U.S. trade balance. Plus on Thursday, Chinese CPI and PPI data. Guy and I have been talking about this. It's not something that has a read-through in terms of Chinese markets into the U.S., but does suddenly the Chinese deflationary story become one that the rest of the world has to pay attention to? The ECB economic bulletin also on our radar for that day. And then Friday, more data out of China, credit data numbers coming out of there, plus right here in Europe, that Germany CPI. It feels like there's a lot of data.
There is a lot. Today you get a lot of data out of the States as well. So ISM services, which I think are going to be interesting. You get the Senior Loan Officer Survey, the SLOOS survey, which will tell us a lot about credit availability and the price of credit for American companies. How big an impact did the Powell pivot back end of last year have on that? You're going to see Caterpillar reporting numbers as well. Today's a busy day.
It is a busy day, but it feels like it's almost a difference in terms of, and a divergence in terms of, I wonder if on Friday we have the same sentiment that we had last Friday, which was, it was a big day, we had so much, and the markets went nowhere.
Yeah. Depends what's priced. So you got to think about that. That's the starting point. What do we got priced? Talking of things we got priced or maybe not priced, Italian data coming through. This is, remember, data that we've already seen to a certain extent. Italian January composite PMI rises to 50.7. January services PMI, 51.2. That's a little better than anticipated. So you see how different peripheral countries are performing at the moment. The core of Europe is where the struggle has been. You're looking at the euro versus the US dollar. This, understandably, I think probably more of a reaction to that move that we're seeing when it comes to the US 2-year. That's theoretically dollar positive. But let's break all this data down. Maria today has been kind of working our way through it. Walk us through these latest numbers from Italy. How does it plug into the bigger picture? What is it telling us?
Yes, Guy, and I love that you make that remark between the periphery and the core, because we saw that reflected too in GDP at the end of last year. Remember the numbers that we got. It was really Spain that was the outperformer, and also the Italian economy doing better than expected. So this time around is the periphery that's pulling through. Of course, we know that in many ways that has to do with the energy story that has continued to drag on the German economy for more than a year now. In terms of the PMIs, as you say, so far no major revisions to some extent. We're also waiting for the euro area numbers, which we got already. Guy, the big question when you look at this data, and of course, granted, a lot of this is backwards looking, and we know that when you look at the European Central Bank, they really care about the future and the data that is incoming, not so much what we got at the start of the year. But nonetheless, there is a question and maybe clues here as to whether or not we're seeing a European economy that has bottomed out and maybe could see better than expected data in the next few weeks, or actually there's still room to to cover when it comes to this economy under pressure. So I think the real question when economies look at the PMIs this week, but also a lot of the data that we'll get this week, you alluded to this, the German industrial production, the factory orders, the CPI number that will also be key. Is this idea as to, is inflation tamed? When you look at wages, how is that playing in? What about the Red Sea? But also, are you looking now at an economy that perhaps has really bottomed out? The worst is over. That is a big question on the macro front for the European Central Bank.
Well, speaking of the European Central Bank, Maria, we like to think of Jay Powell as central banker to the world, but I'm wondering if this iteration of rate cuts, does Christine Lagarde front run the Fed?
Look, that is going to be the question going forward. Obviously, by now it's clear the Fed will not make a move in March. That is clear, is off the table. When it comes to the European Central Bank, to be fair, that was also priced out because the ECB has been clear that this is not a Q1 story, although there is a debate between the summer, meaning June, and April. This is going to be a little bit of a headache for the European Central Bank because they do not like this framing, this narrative that now they have to go first. They've always said they're not they're not date dependent. They will look at the data. They're not Fed dependent. The ECB, remember, the head of the bank likes to say it's on its own journey, but obviously this is going to be a big headache for them. And I think internally inside the bank, there's a real debate, for some even a real anxiety that they could be pushed into what they believe would be cutting too soon, and that would be detrimental for all the work they've done. I think there's a real question inside the bank that they believe that would be a serious mistake that would undo the entire monetary policy that we've seen over the past year, but also they really consider and ponder the many ramifications that it's had from the economy to even the political pushback to inflation, higher inflation reflected. And I think that's basically where the needle is. They really worry more at this point about hiking too soon, being pressured into doing that, than maybe waiting out.
Maria, thank you very much indeed. We've actually got another final piece of data just plugging in as well to the overall picture. French PMI data, final numbers 45.4. The preliminary was 45. So again, weak in absolute terms, but better than originally thought. The comp comes through at 44.6. The preliminary there 44.2. So slightly better data coming out of France. It's interesting how this sort of turns attention to Germany. The core periphery model has been completely reversed. Germany is where the struggle is right now.
It is where the struggle is, and we've talked over and over again throughout Bloomberg programming about whether or not Germany is the sick man of Europe, what it used to be the powerhouse of Europe. Yep. But then if it's not Germany, then where is the powerhouse of Europe? Well, it sounds like it's in the periphery. That's interesting. Greece economy doing well. I know it's not big, but Italy's doing okay. Spain's doing okay. The fact that Spain is doing okay blows my mind, I have to say. Really? Yeah. So do you think about it in some ways? It's like known for economic weakness. Like that's its reputation. It is, but you don't have mortgages there. You have less of a pass-through in terms of the economic effect coming off rates. It's already been through a big review. It doesn't have the energy crisis that Germany has. Yeah. It doesn't have the China crisis that Germany has. No, but it has a labor market crisis that is unmatched and unfixable, it seems. Well, anyway, that's the Spanish story. Let's talk about the German story. Come right back to it. Europe's largest economy due to post that PMI data in just a few minutes. Bloomberg's Oliver Crook is all over that story. Ollie, walk us through it.
Yeah, so we're expecting services and composites today, and really this is kind of where the struggle has been also in services, right? Historically, we know this. Since July 2022, the German economy, the PMI data out of manufacturing has been in contraction. It's now bouncing off the bottom a little bit and moving up, but it's still in contraction. It was services that was carrying things along, and now services is going in the wrong direction. So really these two sort of PMI figures are converging on one another. We're supposed to see a little bit more of that today, but really, honestly, the data that I was struck by out of Germany today was the export data in December, down 4.6%. That is worse than what was anticipated at down by 2.8%. And the full year figure, German exports down 1.5%. So really not a lot of positivity there. And I think that obviously for such an export economy, that's something you got to pay attention to. Yeah, that's where the China story fits into this overall narrative. Ollie, I'm surprised to see you at work today, to be honest. I would have thought if you're working a 4-day week, me too, Monday would be the day to take off. Well, we actually had this debate a little bit earlier. Do you take the Monday or do you take the Friday off? Well, anyway, that's a decision that some employees across Germany need to make now because they're starting out this program, a 4-day work week across 45 companies all over Germany. Part of this is to make, obviously, healthier, happier employees, but it's also down to boosting productivity. And it's just, Guy, the latest country to do it. The UK did it, and I was really struck by this stat, Guy. 92% of the companies that participated in the trial run in the United Kingdom continued it after the trial run ended, so they have 4-day weeks.
So Critty would take a Wednesday off.
I would take a Wednesday off because you got to do it in phases. It's got to be an easy, yeah.
Yeah, but then you take the Monday off, you don't get the Sunday blues. Taking Friday off.
But that doesn't work because if you take the Monday off, then the Sunday scaries just happen on Monday night, and then you have it for Tuesday.
I know, but then you've only got 4 days.
I think the Wednesday actually is kind of the
big thing is. You think the Wednesday's of course it is. Yeah.
See?
Critty is actually German.
Secretly, yes. We got a little bit of Dallas, a little India, a little New York, and now Germany, apparently. Ollie, very quickly, how skeptical are people about this idea?
Yeah, well, listen, in Germany, again, there's as much of an ethos as there is in the United States, which is you just got to work more when you have, you don't have enough labor, right? This is the center of this issue. And so we asked him, because this is what Christian Lindner had to say about this. Never in history has a society increased its prosperity by working less. I asked the CEO of the company that's actually spearheading this program in Germany about that.
Christian Lindner is focusing more on a macroeconomic perspective. So if everyone has a 4-day week, obviously we'll have to think about different challenges. But in our test, it's more focused on the different specific companies who want to outperform their markets by actually saying we are better in terms of an employer than someone else.
So for many companies, they want to be doing this. Why do they want to be doing this? Because they need to attract the labor, Guy and Critty. There is a massive labor shortage. They're talking about a figure of missing maybe 7 million people in the German labor force by 2035. And that is exactly what this is trying to tap into, getting people to come to work and staying competitive in a very tight labor market.
Great stuff. Ollie, I'm still with the Monday thing. Honestly, I think long weekend, 3 days, you get a lot of stuff done. Monday's a great day to take off.
It's easy to work Fridays.
Yeah, precisely. Fridays are a great day to work. You're going into the weekend, a lot of positivity. I kind of understand the Wednesday thing, but I like the momentum of...
Guys just trying to get away from me. That's what's happening. He's trying to figure out what's...
Anna takes Mondays off, right?
Yeah.
I say she takes it off. She doesn't take it off.
No, she works.
She's got a much more important job being the bureau chief here in London, so she's never around on Monday. So Anna's already made the decision. Monday's the way to go. Anyway, German PMI data breaking. The services number comes through at 47.7. It's the final number. A little better. The comp number, though, stays at 47 even. That's basically just down a little tick. But basically, we're kind of in the plus or minus.
Yeah, we are. In euro, by the way, we should mention 107.65 at session lows off that data. We got the French data, we had Spanish data earlier, and now the German data all together.
Do you think it's off the data, or do you think it's off the big move we're seeing in US yields?
I think it's a combo of both.
Yeah.
I'm gonna say no.
You just hedge your bets there.
Yeah, I'm just both, all of the above. I'm just circling all the answers.
Fair enough. Okay, we're nearly done. We've got a great show tomorrow. We've got a fantastic show tomorrow.
Yeah.
So Francine is going to be talking to the UBS CEO, Sergio Motti. We'll bring that interview to you. Francine is up next. The Pulse is up next. Hope you enjoyed today. Have a great rest of the day. This is Bloomberg.
There is no digital without chips, and I emphasize that because everybody speaks about the digitalization of the world, and I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Fed Chair Jay Powell takes a March rate cut off the table and says the job's not quite done.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks.
Well, China vows to stabilize markets after last week's stock slide. Meanwhile, Donald Trump warns he'll impose tariffs of 60% or more on Chinese goods if elected. Plus, unit credit soars as the Italian lender smashes expectations and says it will return 100% of net profits to investors this year. So let's take a look at the European markets map. Again, a lot of questions about what we heard from Jay Powell. Treasury is actually extending some of the sell-off that we saw on Friday. That's, of course, filtering through here to Europe. You can see we're trading without much conviction. The CAC 40 is pretty much flat. The DAX is pretty much flat. And the FTSE 100 gained some 0.4%. Unit credit giving a lift to the FTSE MIB as a whole. That index is actually gaining some 0.8%. Again, policymakers will likely wait a little bit more for clues beyond March before understanding fully what Jay Powell will do beyond March. Chinese stocks also saw quite a lot of volatile and quite a lot of wild swings. Again, it just goes into the psyche of investors as we start a new week, not really knowing quite where to go, and then earnings season continuing. Now, to talk all about these markets, we're joined by Laura Cooper, BlackRock's senior macro strategist for iShares EMEA. Laura, as always, thank you so much for joining us. There's a lot going on, but it's all about inflation overall and actually what Jay Powell does and doesn't do. I mean, are they worried? Does the U.S. jobs market and data that we saw on Friday, coupled with what he says, actually delay cuts by quite significantly?
I think they do delay cuts, probably until middle of this year. I mean, he'd already echoed the fact that they're not going to cut in March, and I think markets will be watching that data. It was interesting, actually, after the payrolls report, we had Fed member Bowman come out and say essentially that this is an environment where, we potentially aren't seeing the type of loosening in the labor market, that rebalancing that they had expected, which could in turn lead to elevated wage pressures and even stickier core inflation. So the fact that markets are extrapolating this disinflationary trend through the end of the year, I think there's a little bit more scope for that rates repricing to come through and for markets to even price out maybe a potential May cut as well.
So how difficult actually is it to explain the jobs market right now? Again, we don't exactly know also if inflation's coming down because of central bank action, and if it's not, it makes it all more wobbly.
Yeah, and it's a great question. I think when we saw the payrolls print on Friday, we were certainly surprised. I mean, there were some seasonal distortions that perhaps lead some caution to that overall headline print. And as well, the wage number was really quite surprising at 0.6% month on month. Again, we did have a drop in average hours worked, largely due to this colder than expected January. So it's hard to read through onto that number as well. But I think taking a step back from the FOMC last week, Jerome Powell said, we're shifting back to that dual mandate. We are seeing signs of rebalancing in the labor market. I think Friday's data does put a bit of a jolt in that, and I would expect at the front end, we have seen those rate cuts, pared back slightly. There's probably a little bit more room for that to really materialize. And the key question is, what impact will that have overall on equity markets?
So Laura, if you look at central banks around the world, is it clear that actually the Fed has to go first before the ECB or the Bank of England move, or could the ECB go first?
I don't think it's clear that the Fed will go first, certainly given the U.S. exceptionalism that continues to come through in the U.S. economy, whereas in Europe, yes, it avoided a recession in the latter half of last year, but clearly those leading economic gauges continue to show signs of challenges, particularly in Germany, against a backdrop where inflation is decelerating at a much quicker pace. Essentially, we're going to be at that 2% target much sooner than what we expect in the U.S. Now, that said, we're leaning against the ECB cutting before the Fed. Typically, we don't see them cut before the Fed, but as well, they've really emphasized the wage data. That was a clear kind of takeaway in Christine Lagarde's presser. So I think they're going to wait to get clarity on those Q1 wage negotiations before they actually cut in June. But the question then is they'll likely cut much more steeply than what we expect to come through in the U.S.
So does it mean that markets will be a lot more volatile until we have more clarity on wages?
I think there is a degree of uncertainty still to be had, given that we are seeing, rates markets still price in about that 5 cuts from the ECB. I mean, I would argue that's pretty fair in kind of looking at the forward path. But again, it's all about the messaging coming through. And it's clearly central banks that continue to emphasize this data dependency. If we do start to see some upward surprises, that's going to emphasize this higher for longer rates backdrop. And I think that has repercussions, not only for equities, but as well for the rates market. And the key is, where to position in this, probably extending some duration in Europe, but still remaining quite cautious in front-end exposures in the U.S.
And so, Laura, what do you do with the Bank of England and the U.K. right now?
The Bank of England is an interesting one. I mean, certainly the fact that last week's presser, we did see the signs that they abandoned their tightening bias, which is something that we had expected. Certainly the economic backdrop continues to be challenged. If anything, we think there's scope for more rate cuts to be priced in this year, just looking at the implied policy path, because, there is this scope of fiscal uncertainty given the election. But I think overall, this is still a challenging backdrop, and I think that's going to trump what we're seeing from the inflation dynamics.
I mean, it was a 3-way split. I know it was only 2 votes actually for a hike, but it's pretty extraordinary. And also the governor would just not commit he wouldn't commit to the fact that the next move is definitely a cut. Could we see a hike if, if there's a lot of this uncertainty with renewed wage pressure?
And I think that's the key question facing markets. Certainly, we did see that upside surprise in UK CPI a couple of weeks ago, the US payrolls print. I mean, there's a number of uncertainties still about the macro outlook. And I think that's why markets are getting slightly ahead of themselves in kind of pricing in these aggressive easing cycles through the end of the year when central banks are emphasizing the data-dependent approach. And that data is going to be volatile over the coming months, which does suggest, there's a lack of clarity on what the policy paths could actually turn out to be.
So interesting. Laura, thank you so much. Laura Cooper, their senior macro strategist for iShares MEA at BlackRock, stays with us. We have many questions also about China. Now, the chief executive of one of the world's biggest insurance companies has told Bloomberg that he intends to scale up the business despite current global volatility. We'll speak to David Rubenstein. The AXA chief executive, Thomas Burbel, also discussed how he plans to manage the transition to lower interest rates and inflation.
Obviously, these changes produce a high volatility of the economic environment, and certainly we spoke earlier about the geopolitical environment. So in a highly volatile and highly unpredictable environment, it is important to take a strategy of low risk. And so essentially what we have said, we have built now a platform that is working very well. We are the biggest insurer now of enterprises across the world. We are one of the biggest in Europe. We want to make sure that we scale up this business more in the next phase.
Okay, let's talk about the economy. The United States has a situation where we have reasonably good growth in 2023, over 3%. Europe has not grown quite as well. Why do you think the United States seems to be pulling away from the European and Chinese economies in terms of our growth? Is it something about the American business environment that the United States has recovered from COVID maybe better than Europe did or China did?
So I think there's a couple of factors. Number one is fiscal stimulus. The fiscal stimulus in the US was much higher than it was in Europe, and obviously fiscal stimulus leads to more demand. Secondly, there is a lot of onshoring happening or reshoring happening from somewhere else into the US, which is obviously something that creates growth as well. And then thirdly, when you look at your demography, this is much healthier than what we have in Europe.
Or do you worry about Russia, Ukraine as a potential insurance risk?
I mean, we worry a lot about these risks because, A, these risks do create claims, and so the Russia-Ukraine situation did create a lot of claims on the political risk side, on the marine side, on the aviation side. So for us, it's important to look out for them and certainly also to see where the next crisis comes from, because even if the Ukraine-Russia crisis was to be resolved, I'm sure the next crisis is coming. Look at what is happening in the Red Sea now, which again has massive implications around maritime transport, war cover for maritime transport, supply chain risk, and so on. So I project myself in a world now in which we see many, many more of these crises happening, and we need to deal with it.
Well, that was the AXA Chief Executive, Thomas Buberl, speaking to David Rubenstein. You'll be able to see more of that interview in a new episode of the David Rubenstein Show, peer-to-peer conversations, coming soon on Bloomberg TV. Now, coming up, stability continues to elude Turkish monetary policy as the lira as a central bank sees another abrupt leadership change. More on that next, and this is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Well, still with us, BlackRock senior macro strategist for iShares EMEA, Laura Cooper. Laura, thanks so much for sticking around. We're talking about ECB, we're talking about the Fed, we're talking about the Bank of England. I mean, this, of course, is in the middle of earnings season. Yes. Like, I don't know if there's a general theme of how things are going or how many cost cuts are happening.
Well, I think there's one theme emerging if we think about U.S. earnings, and that's really just this case of AI exuberance, particularly as those mega caps continue to power ahead. Yes, we did see some idiosyncratic price action on the back of the different reports, but ultimately, looking at the numbers, we have about 14% year-on-year sales growth for those companies. Margins are still above 20% and expected to continue to grow, and that's why we've seen kind of the NASDAQ, the S&P 500 post, fairly robust 4% gains year to date. great, whereas the kind of the S&P 493 continues to be challenged because we aren't seeing that type of exuberance, really that broadening out that maybe you would have expected to other sectors.
But is this exuberance actually based on fundamentals, or is this, future earnings if AI is adopted at a very fast pace?
I think it's both. I think we certainly are seeing some exuberance being kind of driving that price action, but these is really the sector that's going to be profitable. I mean, clearly that came through in the numbers. So in this environment where, potentially there's uncertainty about inflation, about pricing, the policy path, you want to be in these tech sectors that are continuing to show profitability. The key risk I would watch for is really the real rates backdrop. We have seen them rise as those inflation kind of expectations ease further. And if those get kind of too high too quickly, that could curb some of this momentum. But I think that's probably something that's more of a tail risk at this point and really seeking the profitability in tech still going forward.
Okay, so you have conviction call on U.S. tech, but you also quite like healthcare in developed markets.
So I think healthcare is an interesting dynamic in the sense that, positioning is light, valuations are actually quite reasonable, and it has that quality tilt. So in this environment, earnings disappointed largely because of those kind of post-COVID base effects, but this is still in a defensive sector. And if we kind of go a little bit more granular, looking at those key sectors that are actually going to benefit over time from artificial intelligence, like medical devices, for example, those are not yet accurately pricing in the potential impetus that's going to come from that AI development. So we are seeking exposures there because it is a defensive tilt in a still uncertain macro environment.
So what else, when you look at China and all of the volatility certainly that we saw in China today, is it likely to stabilize, or do you kind of make calls that are fairly immune to what China does?
So I think the recent price action is China is a mix of technical selling as well as a de-risking ahead of the Lunar New Year. We did see some of those reports come out that, we are going to see some measures to bolster sentiment. We don't think it's going to be enough to really add conviction that now is the time to increase Chinese equity exposures. But the key kind of question is, well, what implication does this have for European exposures overall because of its export-oriented nature to China? So we are still quite cautious overall on European equities, and it's about taking a really selective approach on a sector basis rather than seeking kind of the broad European equity benchmarks.
Brilliant, Laura. Thank you so much, as always, for joining us. That was Laura Cooper, BlackRock's senior macro strategist for iShares EMEA. Now, the Turkish lira has softened after Turkey named a new central bank governor. The announcement comes as Gaye Erkan stepped down, blaming a smear campaign. Now, for more, we're joined by Selva Baharbaziki from Bloomberg Economics in Ankara. Thank you for joining us. So Erkan's exit from the central bank job has a familiar feel. Her 4 predecessors' terms were all cut short. Should investors be worried?
Morning, Francine. Yeah, Erkan's exit makes her the 5th governor whose term was cut short in the past 5 years. But unlike the previous instances, we think that this one has actually this time a different feel. We have 2 reasons behind that conviction. Number one, previous instances had seen the central bank governor change following a different view with the top management on the course of action for the central bank going forward. Well, this time around, we have Mehmet Şimşek firmly in place as Minister of Finance, overseeing the general policy overhaul of the country and having released now several statements in support of the current new governor who was appointed. That we see as an assurance that the orthodox policies are actually here to stay. Number 2, Fatih Karahan's first act as new governor has been to release a statement, a hawkish guidance, I have to say, over the weekend, that he said that price stability is the priority and the utmost important objective that they're striving for.
So should we expect a shift in policies with Fatih Karahan taking over the top job?
Actually, we think that initially we had seen that the central bank was going to continue tightening, having reached a peak rate of 45 already in the January meeting through alternative measures. We still think that that's going to happen. In fact, this morning just, the central bank released a move in reserve requirements that will nudge deposit and likely lending rates a little higher, even in the absence of rate hikes. But now, following this hawkish guidance from Fatih Karahan, we actually think that it's likely that the central bank will act more proactively if the inflation outlook worsens looking ahead. We just had January inflation announced this morning, just under 65, relatively sideways movement when we look at the annual figures. But on the monthly, it's a 6.7% rise. If that trend does continue, the outsized increases in prices, then we do think that there's now a higher likelihood of a rate hike coming our way.
Okay, Selva, thank you so much. Selva Bahar Baziki there with the very latest on Turkey. Coming up, UniCredit at an 8-year high after smashing profit forecast. We'll look at whether its peers can match that performance when they report this week. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to The Pulse, everyone. UniCredit, one of the biggest gainers on the Stock 600 today after a profit beat estimates across the board. Now, shares at the highest in 8 years after net income came in almost triple of analyst forecast. Now, let's get more on this and the banks in general with our very own Tom Metcalf, who oversees all of our banking, I was going to say banking crisis, but also banking good news.
Both.
In Europe and the Middle East. Tom, thank you so much for joining us. I mean, this is pretty incredible. I mean, stock price is gaining 9.8%. Like, Orchel seems to have done it again. You know, what happens next?
Yeah, I think incredible is definitely the word. This is a big bank, and you look at its share price, 10% today. It's up, I think, more than 50% in the past 12 months. And, you know, I think that's the big question is, you know, Orchel is definitely delivering right now. It's, you know, really incredible numbers, 100% effectively of of net profit going to be given back to the shareholders. No surprise, they're absolutely loving that. And the question is, what more can be done at UniCredit? If the intent is trying to keep up this pace of shareholder return, it's hard to see how they could achieve that. But no, right now they're in a very good spot.
Tom, do they have a growth? I mean, I know he has a growth plan, but actually, given all of the swings and the difference in interest rates coming, does the growth plan hold, or will it continue having to be cost cuts?
Yeah, I mean, that's the interesting thing, that's the cost cuts are the things you can definitely sort of guarantee, as it were. But of course, having spent the last few years on that side of things, they really now need to find the growth if they really want to sort of push things forward. So I think that will be the challenge. But again, a lot just depends on this rate environment. We were talking just before, surely it will start to, we'll still see some cuts at some point. But right now, maybe it's going to take a bit longer than we thought.
Tom, on the other earnings, so we have UBS tomorrow, so we'll also take the show actually from Zurich because we're speaking to the chief executive. I don't know what your killer question to Sergio Armati is. I mean, we have to wait for the earnings, but then you also have the French banks on Thursday. I think you have Société Générale and Crédit Agricole.
Yeah, well, look, I think the interesting thing about UBS is it's Q4 results, and at the same time they're saying they're going to have some kind of investor update. And for me, that's the real interesting thing about tomorrow is what will that constitute? It doesn't feel to me like it's a full-blown investor day, right? But where do they go? What kind of tweaks are they making to that integration plan? Or will it be the message which they've stuck very sort of strictly to is we're on track, we've laid it out, we'll keep on delivering. And it'd just be looking for any deviance from that, I suppose.
And on the French banks, again, I guess the question that comes over, and I saw Crédit Agricole, or maybe the other one, actually doing quite a lot of cost cuts. Again, trying to keep that, SocGen actually trying to keep that under control.
Yeah, exactly. So they come out today and said 900 job cuts, confirmed in an earlier story from a reporter in Paris. So, and again, it speaks to this bigger theme, you can see it with UniCredit as well, is how can Krupa, the SocGen CEO, kind of shape that bank into the sort of position he wants. So he's going down the cost cuts move. He's also looking at maybe some divestments. And I think, again, tomorrow will be interesting just to see, what comes out of some other French banks as well.
All right, we'll keep an eye on it. Tom and his team, of course, will be all over all of the earnings and all of the news. Tom Metcalf, they're in charge of banking in Europe and the Middle East. Now, tomorrow we'll be speaking to the UBS chief executive, Sergio Armati, as the Swiss bank reports earnings. So don't miss that interview. We'll play it out at 7 a.m. London time. We'll have plenty more, of course, on the markets today. The big thing we're watching out for is not only earnings. So we look at the banks, but actually we look at what's happening or what has happened over on the Treasury side. So Treasury is extending a bit of a sell-off, the dollar actually rising. This is after the Federal Reserve Chair dimmed hopes for lower interest rates. Now, the Treasury declines sent waves through bond markets, also pushing some of the government debt, for example, down in Germany.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
to top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
This is Bloomberg.
Now, Fed Chair Jay Powell takes the March rate cut off the table and says the job's not quite done. China vows to stabilize markets after last week's stock slide. Meanwhile, Donald Trump warns he'll impose tariffs of 60% or more on Chinese goods if elected. Plus, UniCredit soars as the Italian lender smashes expectations and says it will return 100% of net profit to investors this year. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. Now, for more on what's moving the markets, we're joined in a second by Justina Lee and Ven Ram from our MLive team. So Justina and Ven both join us. Thank you for joining us. Ven, if you're on the line, a lot of the focus, of course, is on what we saw with treasuries. I understand that Jay Powell doesn't want to commit to March, and he may be pushing that beyond. But what do you make of that extraordinary jobs number on Friday? Does it mean that actually we could see, a cut not sooner than even June?
Yeah, absolutely, Francine, because I think the markets have taken back the rate cut that they were pricing in March. Now they're pricing in a fair bit of chance, 75% of a chance for a rate cut in May. And given what you said about the labor market, the data that we got on Friday, it suggests that even May may be too early, and June is probably where they're converging, the Fed is converging towards a rate cut. Those numbers that we got from the jobs market on Friday were extraordinary. 360 plus of jobs market growth is not something that you see in lean times. And you saw wage earnings accelerating at a 4% plus clip. Those are not suggestive of an economy that needs immediate accommodation, and that's what Powell is wary of, that inflation may reaccelerate in the coming months.
Yeah, and Justina, I really don't understand. It's extraordinary, and we know that there's a U.S. exception, but actually the economy adding 353,000 jobs in January. It's not only a stronger pickup. It's incredible that this happens when interest rate hikes continue to ripple through the economy.
Right, exactly. I think for the past year, we've heard a lot about how, over history, there have been very few instances when the Fed has been able to kind of tamp down inflation without also triggering a recession. And I think the question for economists here is what's kind of different about this time? Is it sort of the lingering effects of fiscal stimulus? Is it about kind of like technological advancement, coming from AI? And I think it's pretty clear that, earlier we were talking a lot about how the pandemic kind of messed up a lot of patterns, like maybe a lot of people saved up a lot of money, and so they're still spending. And I think really it's a mystery at this point, kind of continuing until early 2024.
Yeah, Ven, can you make sense of this? Again, how do you explain such a strong number, given where interest rates are and how fast they went up?
I think the demand in the economy is still so resilient, and the jobs market still sees pent-up demand. And what Justina mentioned, there's this productivity-led growth, AI-led productivity growth in the economy, and that's a huge leg up for the economy. And that is what is keeping the labor market still buoyant. And I think that that'll continue to be the way for the next few months, which is why I think that even a May rate cut is not likely, and therefore June or probably later is when we'll probably get the first rate cut of the cycle.
So, Ven, in your piece today, which is brilliant as ever, you basically say that unless the labor market goes into some kind of abrupt cataclysm, we may not get a rate cut in May. Does that then push back also expectations for the ECB cutting and for the Bank of England cutting?
Absolutely so, Francine, because, the markets are still thinking that, look, you know what, the ECB may come out in April and cut rates. In the event that the Fed is not going to cut rates in March, there is no chance that the ECB is going to cut rates in April. They've already made that point clear. Philip Lane has made that point clear. President Lagarde made it clear in that interview with you in Davos, and the markets are still not buying that. I don't think we are going to get a rate cut in April from the ECB at all.
Yeah, and Justine, I mean, this also goes to the fact that actually inflation could be coming down, but I guess they want to see a protracted data to make sure that it's really coming down to where they need it to be. And if you also look at earnings, it could actually suggest that there's a bit of overheating.
Yeah, I mean, it's pretty interesting, especially with the U.S. I mean, obviously, we kind of saw mixed numbers coming from the tech giants, but I think for some of the earnings, you're definitely kind of seeing a lot of secular forces at play that are detached from the ups and downs of the economic cycle. And I think that is one thing kind of that investors really like, and that's why we've seen kind of a lot of money going back into the Magnificent Seven. It's that it's not just about kind of capturing demand, it's also about capturing these trends that are there regardless of the cycle. I'm talking about like AI, obviously, yeah.
So, Justina, when you look at all of the markets, I mean, apart from inflation and the Fed, is there anything else that will be a catalyst going forward?
Yeah, I think China is sort of a big question here. It had another really dramatic day where it was swinging between kind of like losses and gains. And the reason was that kind of in the end, the regulator kind of came out and said that they would deal with the liquidation risk coming from these like share pledges. And so at this point, there are a lot of people wondering, of course, they've been wondering this for the past year, like, are we at a bottom? Are we going to see kind of more forceful stimulus kind of coming from Chinese authorities? And of course, that's going to kind of have an effect on like commodities and a lot of more cyclical stocks as well.
And Ven, what does that mean for, if you look at treasuries, they looked at the U.S. jobs numbers and they looked at Jay Powell's interview. Again, what will inform them next? Are we going to see a lot of volatility as they adjust and adapt to new Fed speak?
I think we are going to see a lot more volatility in the front end because the 2-year maturity is kind of still overvalued at current levels, despite the correction that we got on Friday and the ongoing correction today. I think that they are still overvalued. There is some 15 basis points to catch up on fair value. I think that's going to happen in the next week or so. The 10-year yield, I'm not too sure it's going to go further from here because, if you look at an inflation premium of 1% from current inflation levels, 10-year treasury is around where it needs to be, which is around 4%. So I don't think there is going to be a major sell-off or volatility in the long end of the curve, but in the short end, yes, for sure.
So, Justina, watch for VIX, watch for inflation numbers. I guess PMIs are we're going to be like red alarm on PMIs and any kind of data that comes out.
Yeah, I think kind of like leading surveys are kind of give a sense of kind of whether we're seeing a lot of the lagged effects from monetary policy coming through. I think one interesting thing in the market this year is that even though they've been kind of going up, especially in the U.S., a lot of that has been driven by, as we say, kind of these big tech names and kind of a more defensive style, what we call quality stocks. And so it's not necessarily that there is kind of a huge risk appetite for necessarily riskier plays. And I think whether we'll see a bit of that rotation will be interesting as well.
Great. Justina and Ven, thank you both for joining us. Justina Lee and Ven Ram from our MLive team. Now, coming up, the U.S. vows more strikes against Iran's forces and its proxies in the Middle East. Plus, Israel, Benjamin Netanyahu hits back at criticism over U.S. relations. We discuss that next, and this is Bloomberg.
there is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
So the Houthi rebels in Yemen have vowed to respond to the bombing conducted by the UK and US forces on Saturday. It comes as the Biden administration warns of further strikes against Iran's forces and its proxies, with US National Security Advisor Jake Sullivan talking of a sustained but not open-ended campaign. Now, to bring this all together, I'm here with Bloomberg's international affairs columnist, Mark Champion. So, Mark, thank you so much for joining us. Looking back at, what happened over the weekend and the strikes carried out by the US and the allies, were they effective?
Well, it depends on what you are trying to achieve. What the goal is. So I'm sure, militarily, I'm sure they were effective in the sense that they will have, been targeted and they'll have hit their targets. And some they will have degraded, some level of the ammunition stocks, the infrastructure, and so on that these militias have. Whether or not, then the second question is whether it's going to deter either these militias or Iran from continuing with the kinds of strikes that they've been doing, and that is much less likely. And in fact, overnight there was a militia attack on one of the U.S. bases in Syria, where there are U.S. troops, but also Kurdish troops, and 6 Kurdish troops were killed. Another drone attack. I mean, the fact is that these militias are now armed with drones that allow them much more reach than they used to have.
Mark, U.S. officials say they won't be dragged into a prolonged or protracted, war or regional conflict. But what are the risks?
The risks are definitely there. Every time, there's a strike, the risk of a counterstrike that, is too effective or, is not expected, that always exists. I think, for now, it's very clear that the U.S. from the signaling it did, from the time that it took, from the way that it's making clear that it's not hitting Iran directly, all of that, it makes it very clear that the U.S. does not want to escalate, and the Iranians know it. The Iranians also have made it clear they're not in for a war. That's not what they're looking for right now. But there's a lot of players that out there that neither side fully controls. So it's it is dangerous. But for the moment, neither of the major players wants to see this escalate. So they'll do what they can to prevent it from doing so.
Are we any closer to a ceasefire in Gaza and the release also of the Israeli hostages?
Well, there are talks, going on, as we know, and they're going to be really difficult. Jake Sullivan said so as much over the weekend. I think at the moment, what the Israelis and the Americans are saying is that the ball is in Hamas's court, that the Israelis have made a proposal. It's now up to Hamas to respond. So we'll see. But it's clearly not imminent. But it is kind of vital if this risk of escalation is to start reducing. You're going to have to see something happen in Gaza that reduces the level of warfare there.
Do you think, Benjamin Netanyahu stays in power given all of the criticism?
In the medium term, I think he's got a mountain to climb to stay in power. But in the short term, so long as the war is, as intense as it is, he seems to be safe.
All right. Thank you so much, Mark Champion there. Our Bloomberg opinion columnist covering Europe, Russia, and the Middle East. As always, also read his columns that are on the Bloomberg terminal, but also on our website. Now, attacks on commercial ships in the Red Sea have also prompted companies to test ambitious new land routes through the heart of the region. So one proposed route will take goods from India, the UAE and Bahrain through Saudi Arabia and Jordan and on the Israel and then to Europe. Well, let's bring in Bloomberg's Paul Wallace. So, Paul, who is trying to use these routes?
Hi, Francine. Well, we're seeing some Israeli logistics startups proposing this route from Bahrain and Dubai, chiefly, all the way to Israel's Mediterranean coast. And there are also some slightly different routes, land routes proposed. Hapag-Lloyd, the big container shipping company, is also looking at offering clients routes from Bahrain and Dubai to the northern Red Sea, to Saudi Arabia's western coast in the northern Red Sea. Essentially, both of these routes are to avoid the southern part of the Red Sea, where these Houthi attacks have been taking place. And it's still sort of a niche proposal at the moment. There's been news that some sort of chemicals and some electronic goods are going to be moved by truck from Dubai to Israel. But I think for the vast majority of goods, that's not really economically feasible and wouldn't really save much time. But the existence of them shows just how worried shipping firms are. And I think it also underscores that they think this is going to last for a long time, for many more weeks, if not months.
So, Paul, first of all, are these, if you look at these routes, and you're kind of, intimating that, commercially and politically they're a little bit difficult, what are the wider implications of these attempts, to try this route?
Well, I think that the goods that will go on them are probably goods that customers in Europe are happy to pay a premium for, maybe to get them a few days earlier than they would if these goods went around the Cape of Good Hope, around the southern tip of Africa. So that's probably something that customers who want to pay a little bit more can use this. Politically, if this route works, particularly the one going to Israel and its main port of Haifa north of Tel Aviv, politically that would be significant because although Bahrain and the UAE, where Dubai is, have relations with Israel, formal relations, as does Jordan, which borders Israel, Saudi Arabia doesn't, and all these land routes require going through Saudi Arabia. If the Saudis are willing to let trucks go through their territory towards Israel with minimal paperwork, and they don't insist on things like the goods having to change trucks at the border with Jordan, then that would be politically significant and yet another sign that the Saudis are moving towards sort of formal recognition of Israel. So beyond just the existence and beyond the trade implications of this route, I think it would be politically significant if it works, and a lot of people end up using it.
So interesting. Paul, thank you so much. Paul Wallace there with the very latest, of course, on these shipping routes. Now, coming up, Germany tries to revive its sluggish economy by trialing a 4-day working week. We'll discuss whether it will work next. This is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So Germany is attempting to revive its sluggish economy by cutting working hours. Dozens of companies are taking part in the trial of a 4-day working week. Now, it follows similar pilots here in the UK and across Europe. Our very own Oliver Crook is in Berlin with all of the details. Ollie, I mean, for some it's a dream. For others it says, well, it just means that you're doing, 5 days work in 4 days. So take us through the project and what they're actually hoping to learn.
Yeah, so I talked to the director of the project, and that was my first question, was really, what is the architecture, what's the structure of this program? And actually, the goal is, Francine, to work less, to get people to work less. It's a 4-day week, same amount of pay, but less work across the board. It's to make the employees healthier, to make them happier, but also to boost productivity. So it's across 45 companies across Germany. This will go for 6 months, and then afterwards they're going to sort of reap the data. And it follows similar things in other countries, but notably, Francine, in the UK, where they did this demo for 6 months, and 92% of companies that participated decided to extend the trial of the 4-day working week on beyond that. So I actually think that is actually, sort of an interesting thing. I'm not sure that the dynamics will be identical in Germany, but we'll see.
But so how skeptical are Germans of this idea?
I mean, I think it depends on the Germans that you ask, but I will tell you there are a number of people that I've spoken to, whether it's politicians, people in business or in lobbying groups. They say that the main problem with Germany right now is people don't want to work that hard. So this is definitely one part of the population that believes that. And I'll quote Christian Lindner here, the finance minister, saying, "Never in history has a society increased its prosperity by working less." So this is the question I put to Carsten Meyer, who runs this program here in Germany, and here's what he had to say to that.
Christian Lindner is focusing more on a macroeconomic perspective. So if everyone has a 4-day week, obviously we'll have to think about different challenges. But in our test, it's more focused on there are different specific companies who want to outperform their markets by actually saying we are better in terms of an employer than someone else.
And so while this may not result in net output that is higher, it will be higher productivity. But what's interesting, Francine, is really at the heart of this, these are companies that are asking to do this. Why? Because of the labor shortage. They cannot find the people that they need to do the jobs that they need done across Germany. So what do they say? They say, hey, listen, come work for a 4-day week, and that will encourage them to get the best talent here in Germany, where they say that they could be missing 7 million people from the labor force by 2035. So this is a major issue here.
So wait, what day are we taking off, Ollie? Because that's really the question. Do you take a Monday? Do you take a Friday?
So we've been all over this. Some people even suggested Wednesday. I mean, maybe that's completely nuts.
I'm a Wednesday girl.
There's some logic there. Yeah, you're a Wednesday girl? Okay. I think I'll take Friday off.
Okay, there you go, Oliver Crook. It's a deal. Oliver Crook in Berlin with this trial of a 4-day working week in Germany. Now, the earnings conversation continues all of this week. Some of the biggest oil and energy companies release their data. Luxury rounds up the week after a mixed reporting season for the sector so far. So to discuss all of this, we're joined by Bloomberg's Chloé Mellet. So Chloé, what will investors actually be looking at when there's big oil? So we have Total Energy and Equinor and BP.
And BP, yes, exactly. So as always with big oil, the focus is on buybacks. So what we've seen so far is a slowing pace of buybacks. So we're still seeing very resilient, very massive numbers, really, but a slowing pace. And fourth quarter earnings will not be record breaking, but they should be fairly resilient.
So luxury, I mean, luxury did really well, and then there's a lot of questions about luxury. What are you watching out for this week?
So far in terms of luxury, we've had a bit of a 50-50 split with LVMH and Richemont doing really well, and then Burberry issuing a profit warning, for example. So it's a bit of a mixed bag, and it seems like brand positioning and pricing power really is at the core of who is doing well and who's not. We've got Hermes that should be on the winning side this week, and then for Kering, who owns Gucci, it's a little bit more of a less of a rosy outlook because it's going through a brand turnaround.
Chloé, in general, do you feel like actually sectors, it's not really a sector stories, but it is really a company story. So if you have the right products, people want to buy it. And actually, if you don't, then you get slammed.
Yes, absolutely. This is what it seems to be about. And this is what Gucci is going through at the moment, trying to find the right audience, really.
It's so interesting. Thank you so much, of course, looking at some of the earnings there, Chloé Mellet. Now, we're also looking at UniCredit. This is a stock that's gaining 7%. I think it was gaining 8.5%, actually, just a short while ago. But the profit beat did also raise shareholder returns. So you can see UniCredit gaining some 9.9%. Tomorrow, we'll also be speaking to the UBS chief executive, Sergio Armotti. This is as the Swiss bank reports earnings as well. The other thing we're looking at is Treasuries extending their slide, and this is dollar rising as Federal Reserve Chair Jay Powell dimmed hopes for lower interest rates. The Treasury decline sent waves through bond markets, pushing down government debt from Australia to Germany. The dollar also strengthening against most of its major peers. European shares, you can see a little bit higher, but U.S. equity futures actually declined. Comments from Jay Powell underscored how policymakers are really trying to push back against some of the expectations for interest rates to fall early in 2024. Up next, it's Bloomberg Brief with Danny Berger and Manus Cranny in New York. This is Bloomberg.
What are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time, I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place how that shakes out in cities. So yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Menace Cranny.
And I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Powell pushback. The Fed chair says Americans may have to wait beyond March for the central bank to cut rates.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks.
The U.S. vows more strikes against Iranian-linked groups in the Middle East after hitting dozens of targets across Iraq and Syria over the weekend.
And in banking news, job cuts are coming at SocGen while UniCredit's profits beat estimates across the board. Very good morning. Look who we've got here. She's finally got here, 3 years apart. Welcome back to America.
Thanks. I was going to say, do you think viewers notice something different? The fact that we're both here together. I'm back, Menace. I got to say, I feel like a tourist in my own country.
Well, I suppose I've got to ask her whether rents are still at peak, and have you got your FICO score?
Let's see. Rents are still difficult. Can't find anywhere. FICO score through the floor now after being gone for 7 years. Can't get a place. Can't get a credit card. I hope you have an extra bedroom, Menace. I might be moving in.
And you've actually got a visa to be in this country. I'm one of the tourists.
I don't need a visa. I got a passport. You'll have to show me the ropes. We'll do a role reversal.
We're going to do a little bit of a welcome to New York for Danny. Welcome back to New York for Danny. Good to have you in the same place at the same time.
Yeah, great to be here.
Let's make music. Let's make the Bloomberg Brief. Talking about markets, I mean, these bond markets, the vigilantes have either been reawakened or the Bears are back in charge. But whatever way you look at it, these two-year yields are spiking higher. 4.43. It was a monster day on Friday, up 16 basis points. The jobs report essentially scorched any possibility of a March cut, and May is dissipating as well. Then he goes on 60 Minutes, Powell, and he sort of disembowels the bulls as well. Stephen Major has a cracking note out this morning. You've got yields rising on 2s, you've got yields rising on 10s as well. And what Major says, which is the price is right. It goes back to a TV show that we watched when we were young in the UK. Load up on your 10s. They're going to outperform the T-bills. When it comes to crude, we're down by 1/8 of 1%. Again, I give it to you the 7-day trajectory for oil, Danny. We are down over 7% in 6 days. This is the potential for peace and supply over those heightened geopolitical risks over the weekend. And the Bloomberg Dollar Index up by 1/3 of 1% as yields pop and spike and roll to the upside. So you're looking at entering the 6th week of gains for the Bloomberg Dollar Index. This is about a conviction that March is toast and that May looks as if it is dissipating by the day in terms of rate cut potential. Good morning, Danny Berger.
Menace, we also had the prices right in the U.S. Our U.S. viewers will know that. Yeah, well, you have to like guess what things are, and if you guess it, you get it. I don't know. I don't really remember. I didn't watch it, but I know it existed. Menace, you had all of the fun without me last week for this equity market. A booming market thanks to the Mag 7. Meta alone adds a record amount of market cap into this market, but we take a pause today. The payrolls didn't derail the stock market, but Will Powell. Menace mentioned those comments, down about 0.25% for S&P 500 futures. NASDAQ fall 0.2%. David Costin over at Goldman says you can still buy Mag 7. Mag 7 is going to continue to go places as long as earnings show up, even if we get a repeat of the dot-com crisis. Finally, Menace, just want to mention China. wild ride this morning. At first, they were down some 2%. Then China says that they vow to stabilize this equity market, perhaps shortcoming. Either way, we end the day up 0.6% for China. But what will derail Goldilocks, even though we are weaker this morning, Manus? This is how Julian Emanuel puts it over at Evercore. We both looked at this note over the weekend saying, what could derail Goldilocks? Slowing growth, sticky inflation, extended valuations in particular from these levels, 22 times forward earnings versus Goldilocks' average of 18.6 times, point to weak forward returns. So maybe Goldilocks is in trouble, Manus.
Listen, it depends whether you believe that the Mag 7 has run out of power. You just look at what Meta put in on Friday. Just an amazing return. Mag 7 on a relative basis is trading at about a 33% premium to the rest of the market. And herein lies the point. Do you go for breadth? That is one part of the narrative, isn't it? You know, do you steer away from the Mag 7? Do you go for breadth? And it was a mega day for Meta on Friday, up 20% at 197 billion. One day accumulation of value. Danny.
Yeah, my fun fact for you is that market cap added, almost 200 billion, Manus, was the most ever. That's the most ever we've seen market cap added to this equity market from one single stock. Monster day. It
was a monster day, and it managed to usurp anything from Apple and Amazon. You go back to 2022, the monster day for Amazon. Let's bring in our guest this morning. It is Katrina Dudley, investment strategist over at Franklin Templeton. She joins us now. So Danny comes back to New York, and they manage to roll out a Steadicam. They roll out a human.
Where's my red carpet, though? I thought they were going to roll that out for me.
You know that nobody's been in here since at 5 o'clock since I've been here.
You know what? We're going to roll out the red carpet for the Academy Awards. So,
well said, Katrina. Well said.
So, right, Danny set the stage for Goldilocks. What can upset this Goldilocks scenario that we're in? Because we are in some kind of nirvana.
You know what? Let's just take a pause and say the American economy is doing well. I mean, a year and a half ago, Meta, nobody wanted to speak about. They were the ugly child of the stock market, and suddenly it's up 20%. Everybody wants to own it. The American economy is doing well. We've been talking about Powell and about the Fed and ECB. They deserve that pat on the back because they have been successful. They've done what we wanted them to do, which is control inflation and keep people employed. And that's great. So why does everyone want to kind of bring in, take away the... It's
bring
not
in
a
the
punch
burrs.
bowl. Yes.
But Katrina, is it not because we're scarred of a few years ago when the Fed started hiking rates and then the Mag 7 gets derailed? Higher yields means that tech stocks can't continue. Who's to say that won't happen again with our average hourly earnings 0.6% month over month? Are we not under threat of that again?
I think as we look at the market expectations for growth going forward in terms of growth in earnings, we do think they're a little too optimistic. But in terms of the Magnificent Seven, I think you need to take them out of market multiples. I think people need to be very cognizant that you have them, and then you have the 493 other stocks that we can invest in. And so that's something that we need to focus on.
My small caps, Manus.
Oh, I was going to get to small caps in a moment. But it is, to your point, you do say, I mean, this is music to her ears, which is we have a bear market in small caps. And you saw this on Friday on the Russell 2000. It really was a tough day because those March rate cuts come out of the market. May gets, dissipated. You would say that they will benefit from onshoring, from the CHIPS Act, from deglobalization. So you are, I mean, I can't call you a full bull on breadth, can I?
But what you can call me a bull in is the American economy. And I think that that's what small caps are that representation of. I mean, if you take a look at, we talk about the CHIPS Acts, we talk about reshoring here in America, and small caps are the way to play that, and you're playing it at such a discounted valuation, and there's just so many opportunities. The one thing with small caps, though, is beware. Because not all small caps are alike. So just kind of, going and buying a small cap index may not be your best, opportunity. You really need to dig into the details.
See, it's Katrina lifts me up by saying she likes small caps and then re-breaks my heart saying that you can't just buy them all. So what do I need to avoid then, Katrina?
I think you want to avoid things that have got commercial real estate exposure. We found that out last week with some of the bank exposure. You want to avoid companies which have a lot of leverage. I think that, really large last year, the higher interest rates didn't come through the numbers, and I think that they are going to come through the numbers. So you want to kind of take out those things. Apart from that, you want to look for companies that are very domestically exposed. That is a general comment about small caps, but I think it's something you really want to focus on. And then finally, you want to make sure you've got a company that's able to manage its labor costs. You talk about that 0.6 month-on-month wage increase. You want companies that have good relationships with employees.
But then you would say that 0.6% of a wage number is a wake-up call. I mean, you could be full bull in the American economy, but you say that the wages aspect of it is going to be the headwind to double-digit growth.
Yes, it is.
Or potentially.
It is. And I think it comes down to who are you talking to? And this is where you need to have feet on the ground and you need to be actively engaged, because you want to invest in those companies that haven't, had disputes with their labor, that have taken care of their labor and have held on to their labor, because those are the companies that will be able to mitigate some of those wage increases, and they'll also get the benefits of productivity because they've got training and they've got longevity in their workforces. So they're the types of companies that we're looking for. We don't want the companies that have been churning and burning their labor, because they're the ones that are going to really suffer.
She's saying you have to do actual work to invest in the stock market. That you actually have to.
Well, that's called active. That's called active management. That's why you pay the 1%.
I was going to say, I think people actually get paid to do that. Katrina, the other thing that stood out to me from your notes, you write about election risk, saying that in the U.S. the market outperforms going into the underperforms into the election, outperforms afterwards because you have that certainty. So should I be buying any election-related dip then?
I think that you've got some period of time to wait before you look at buying an election-related dip. The interesting thing here is that there's a lot of difference between the two candidates. So if you take the oil and gas sector, for example, you really need to know who's going to win in order to know who to buy coming out of that. And so I think that you've got to be very cautious. And we also learned with a couple of our other elections that you don't necessarily want to trust the poll data going in. So I think that in this case, I'm actually going to take a different aspect. You really want to buy more of a general index coming out of that election, and going into it, you want to be a little cautious on the overall market.
Well, Danny's reminded me, apparently you did have in the United States of America The Price is Right, which takes us to Opportunity Knocks. Now, this is Stephen Major's note this morning that he's just put out. It is called Opportunity Knocks. This is about the bond, the backup in the bond market and yields. And I just want to get a sense from you this morning. He said it's a talent show, Opportunity Knocks. The winners will be decided by the public vote rather than a panel of expert judges. And he basically says you want to buy bonds on this backup. It's going to be a better proposition than T-bills. And this goes to the narrative about I've got my money locked up in a CD, I've got my money locked up in T-bills. Is there anywhere in the portfolio, is there room for duration at the moment?
Look, I've never liked anyone who said you want to own the better fool theory, is that you want to own any stock or any bond because someone else is going to like it better for you the next month. I think you've got to come back to a balanced portfolio, and I think this is a time where actually balance pays. You talk about having maybe your money locked up in a CD, but you're actually earning money on your bonds, and we haven't had that for such a long period of time. But you've got to acknowledge that inflation is still a number that's positive, and it's in that 2 to 3% range. So you want to have balance. You need a ballast in equity so that you've got some protection as well. So I think that there's just such an argument here for a balanced portfolio coming out of this, and that's the same argument we're making whether it relates to the stock market. We've said balance between the 493 and the 7.
Does that mean you buy this argument then that the money in cash isn't too sticky and it's going to add to the equity market, that everyone who's just loaded up on cash
but the bond
now,
portfolio managers say it'll go to them.
Right, yeah, fair enough. That's what Stephen Major says, right? That it's going to go from the bills and it's going to go into bonds. How much of that money goes into equities? How much of that is a catalyst for another record high?
I think there's a couple of things that are going to weigh, that are positively going to be weighing in on equities. First of all, we don't have as much home buying activity at the moment, so people aren't taking money out of the market and putting it into houses. They're trying to rent them, which is why the market's so tight. Anyone? And then the second thing is those positive wage numbers are good for the consumer. The consumer's building savings, and those savings need a home. I do think that they will go into the equity market. And I just think that if you're I've always talked to my friends about investing. I just said you just want to be regular, and I think that that's what we expect to see, is just gradual support for the market instead of these bursts of money coming in and out. I think you're just going going to see a little more of a regular and a more gradual return to the market. We do see some possibility of weakness as we go into the election cycle, but we're positive coming out.
Katrina, thank you so much for joining us. This is so great. We're all together.
Day one.
Day one.
Marriage
Wonderful.
is made in heaven.
Exactly. Katrina, thank you so much for joining us. That's
Good to see
Katrina
you, Kat.
Dudley of Franklin Templeton. Manus, I love that. You actually have to do work. You need boots on the ground to invest in this market.
That's called understanding the economy and actually where to deploy money.
It certainly is. Okay, let's get to some of our other top stories that are trending on the terminal this morning. Boeing needs to do additional work on about 50 undelivered 737 jets after rivet holes were drilled incorrectly. It could be a setback that could further slow deliveries on a critical program already restricted by regulators over quality lapses.
And the FT reports that Iran used Lloyds and Santander to covertly move money around the world. This was part of a vast sanctions evasion scheme. Representatives from the banks can't comment on the individual customers.
Adana plans to launch a $2 billion bond sale as soon as today. Banks led by Morgan Stanley and Goldman are expected to manage the offering. It's a key win for banks over private credit firms that had offered a record-breaking $5 billion loan to the UK insurer. Manus.
Coming up on the show, former President Donald Trump signaling he may put a tariff on China that is more than the 60% if elected. We discuss the details right here on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Your critics are saying that you're going to start another trade war with
China. It's not a trade war. I did great with China with everything.
Now the Washington Post is saying that you're talking about 60% tariffs on Chinese goods. Is that in the cards?
No, I would say maybe it's going to be more than that.
Former President Donald Trump speaking to Fox News with China facing uncertainty in its stock market, now potentially uncertainty in trade. So, as China's stocks kicked off the week, another volatile session, policymakers vowing to stabilize the equity market. It was a chaotic trading week last week that saw all shares sink to a 5-year low. Let's bring in Justina Lee on this. Justina, is it the bottom yet? Have we found it? Is it only up from here?
Yeah, I think everyone's been asking that question for the past year now. And I think it's interesting that today we did see large caps end up in the green by the end of the day. And that's partly because the regulator has come out and say that they will protect the market against these risks from, pledged shares. But at the same time, I think it's notable that the small caps still ended the day deep in the red. And I think that's a sign that currently people are not just worried about a lot of the structural challenges of the Chinese economy and whether we're going to get decisive stimulus. They're also worried about the kind of these snowballing effects from these structured products where the banks kind of have to sell more shares if the shares keep falling. So that's kind of leading to a bit of a vicious cycle there.
So we just listened to Donald Trump responding to Maria Bartiromo in terms of the potential for higher tariffs than had been speculated. 60% was the number that's floating around in the ether. I mean, again, we're in full electioneering mode, but what's the prospect of another Trump? Is it impacting the currency market already? I know that hedges have been put on that side. How is it manifesting in the China market?
I think for now, Chinese markets have a lot more to worry about beyond Trump. But it is interesting that, Goldman Sachs recently said that when they talk to onshore clients, that is the question that they get the most. What does another Trump term mean for the Chinese economy? Because it's not good news based on kind of the track record last time around. Now, of course, it's true that you never know if there will be more than 60% tariffs, and you never know that. And we both know that kind of animosity against China is something that both parties now agree on. So there's definitely no sense that, tensions would be eased under another term of President Biden. But I think anyhow, this would be another source of pressure on Chinese markets, even if kind of the geopolitical implications could be positive for the Chinese government.
Okay, Justina, thank you very much. Justina Lee there with the very latest on the Chinese markets. One market that is quite literally furiously lit up is the bond market, repricing the narrative after Jay Powell went on 60 Minutes yesterday, made it very clear that to cut rates now would be a folly. We just can't do it at this moment in time. That is the view from Jay Powell. Again, reaffirming those pretty big numbers, jobs numbers you had on Friday. So bunds also dovetailing that, and 10-year government bond yields in the United Kingdom up by 6 basis points as well. So again, this is about extending into the back half of the year the potential for rate cuts. Bond yields rise. Stephen Major at HSBC say, buy your 10-year bond yields now as it backs up. Good morning from New York.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
efficient resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
The world's biggest sporting event is coming to the world's biggest stage.
We're looking forward to hosting several matches, and we just scored the winning goal. New York City,
New Jersey
will host the FIFA World Cup Finals. In many ways, it's a homecoming, right here in the birthplace of the American soccer tradition. Let's go, New Jersey and New York City. See you in 2026.
Do you see that split screen, Manis, from Phil Murphy?
That's
I
us.
feel like they're coming. That's literally what I thought. I was like, are they coming for our job?
Soccer or football? What are you? She's just back from London now. She's just back from how many years in London?
7 years. I'm football.
Come on. Whoa.
I also married a Brit too, so at home we say It's like speaking another language at home, basically. At home I say football. I'll carry it into the real world. Here's what else I found out. So,
Go on.
New York gets the final. 8 games are going to be played out of the MetLife Stadium. Manis, my question for you is, do you try to get a ticket, or do you go off to Kansas or something and try to avoid this all?
Having covered the World Cup in Qatar,
Yes.
where it was a little bit warm and a lot hellishly well organized, I gotta say, get your ticket because it is a unique, it's just an utterly unique experience. By the way, Dallas is going to get 9 games, more than any other city, including the semifinals. So whilst Dallas didn't win in this sort of the coveted, the final, they are getting 9 games. But of course, we've got to talk about Hong Kong, Lionel Messi and David Beckham. Boo. I mean, did you see it?
Yes, I did. This is the thing. They rolled out the red carpet. I didn't get the red carpet, but Messi got, he's
So this was the Dolphins, this was the Miami Dolphins playing in Hong Kong.
So Inter Miami versus the Hong Kong team. Messi comes there. They're all excited for him, but he's on the sideline the entire time, so they boo him. I think we have some of the sound here. You would boo.
Well, listen, if I paid $624 and you told me I was going to go and see, I don't know, Sting, you were going to go and see Taylor Swift, and Taylor Swift or Sting didn't turn up on the stage, would you be happy?
No, but it's the okay, look, I think you're right, but here's the thing. There is in the contract that Messi has to play for 45 minutes each game unless he's injured. So there's a loophole here that Messi gets a get out of jail free card.
Listen, the Hong Kong government are even disappointed. They gave grants. They gave grants to the stadium. They gave grants for this to happen. When the Hong Kong government, which is the Chinese government, is unhappy, you got to say, that's a problem.
Yeah, it's a problem, but...
Lawsuit or just a problem?
Again, they can't sue him because Messi has that get out clause, so they're safe there, Manis. Well, maybe he'll be at the World Cup. Maybe we'll see him there.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Could face bigger challenges next.
It was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger, also in New York. Here's what you need to know.
Powell pushback. The Fed chair says Americans may have to wait beyond March for the central bank to cut rates.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks.
The U.S. vows more strikes against Iranian-linked groups in the Middle East after hitting dozens of targets across Iraq and Syria over the weekend.
And in banking news, job cuts, they're coming to bear at SocGen, while UniCredit's profits beat estimates across the board.
Manus, I think UniCredit's up some 7% in the equity market. It's running away with it, but here's your look at the rest of this market. U.S. equity futures are lower this morning after an all-time high on Friday. So Europe does a little better because of the earnings. Can't say the same here for the U.S. It was the tech earnings that brought us forward. It is Powell's comments that are now denting this equity market. So NASDAQ futures also down about 0.1%. We're just speaking to Katrina Dudley, who said you can have a more balanced portfolio. You don't just need the Mag 7. But David Costin over at Goldman Sachs says that Mag 7 can continue to dominate as long as the earnings show up, even if we get a repeat of the dot-com era. Finally, China equities. A wild, wild ride this morning, Manus. At one point, the CSI 300 was down 2%. It went up 1%. It settled about up 0.5%, with Chinese officials vowing to stabilize this equity market. Maybe some short covering, but basically the euphoria going everywhere globally, except for China in this equity market, Manus.
Well, the short end of the bond curve has really paid attention, not just to the jobs report on Friday, but really taking what Powell said on 60 Minutes yesterday. The danger of moving too soon is that the job is not quite done. And there's this explosion at the short end of the curve. Up by 16 basis points on Friday, another 7 basis points this morning. What do you do when you get this back up in the yield truck? There's 10-year bond yields at 4.0867. We just had Katrina Dudley with us saying, now is the year. This is the year of the balanced portfolio. But the short end of the curve is quite literally scotching any possibility of a March rate cut, and it is moving the May probability further and further out. So you see this propulsion at the short end of the curve, which could challenge, at some juncture, really challenge the equity market. The oil market is down by 0.5%. I want to just give you a stat. Over the past 7 days, over the past 6 days, you're down over 7%. Again, in the backdrop to all of the attacks from the UK and the US, the retaliatory moves by them, there are peace negotiations ongoing, and that is the subplot to the drop in the oil market. The dollar is bid by 1/3 this morning. Again, adding to its overall trajectory. We're entering the 6th week of where the dollar remains bid as it pays attention more to the risk narrative than it does to the rates narrative. Sorry, Danny, pays more attention to the rates narrative than it does to the risk narrative, because if it was really attendant to the risk narrative, this dollar would be lower. This is a conviction. There is no cut in March. Danny.
We look at like what Katrina told us, for example, at Franklin Templeton, that it's about America, that you don't want to bet against America, that Powell has done what he said he would do, Manus. We do have inflation coming in despite hotter jobs figures, but that's the point. Inflation is coming in, and this American economy is still strong. People are still getting paid more than usual, and they're still employed.
I think it's interesting. She said, look, stop baying for blood when it comes to lambasting the Magnificent Seven.
Yeah.
Enjoy it. Enjoy the run while it goes. And to that extent, yes, the valuations may be ahead of the rest of the 493 out there, but look at what Meta did on Friday.
Yes, and look at the earnings. Well, not all of them, Tesla aside,
Fine.
perhaps. Still strong. I mean, if they can show up again, like Costin says, why not? Now, the other risk we have to keep in mind, Manus, and we talked about this a little bit with Katrina, it's elections, it's geopolitics, and there we get back to that oil story. It's 3 days of attacks. The U.S. is vowing more strikes against Iran while insisting it won't be pulled into a regional conflict. Joining us now is Bloomberg opinion columnist Mark Champion. So, Mark, we had yet another round of strikes over the weekend, with strong rhetoric coming out of it. Iran saying that the U.S. has violated Iraqi sovereignty, the European Union warning of more escalation. So what exactly was accomplished by another round of strikes?
Well, they will have showed that, that the U.S. has drawn a line and that there is a cost to attacking U.S. personnel. Whether or not it will deter either the Iranian militias or the Iranians who stand behind them, Iranian-backed militias in Iraq and Syria, that's a completely different question. And indeed, overnight, there was an attack on a U.S. base in Syria where no Americans were injured, but 6 of their Kurdish allies were killed. And so, I think what we're likely to see is, a quieting of the attacks. There were over 160 since October on American personnel in Iraq and Syria for, so long as this goes on. But it's not quite clear why either the militias or Iran would stop. For that to happen, you need one of 2 things. They have, a short-term goal, which is to get, to get Israel to end its war in Gaza, and they have longer-term goals, which are to get the U.S. out of both countries, Iraq and Syria. So they, it's not quite clear why they would want to do that, short of the threat of an all-out war, which the U.S. is not willing to give.
It's interesting when you look at the rhetoric from the U.S. side. Sullivan says sustained but not an open-ended campaign, and this is as Antony Blinken arrives in the region. This is his 5th tour. People in the region that I've spoken to say, look, this is a very febrile situation. It's like a tinderbox. In terms of the officials, the risk is, it's not what they want, is that they are provoked into a much deeper regional conflict.
I think that's absolutely right. I mean, both the U.S. and Iran have made very clear that they do not want to see this escalate into a direct fight between themselves. The problem is that you have a whole host of players in between them, and they are not fully controlled. So, exactly, in any case, even when you are conducting strikes yourselves, you can never be entirely sure, what will happen. There can be collateral damage that you weren't expecting, all kinds of things that can happen. But when you don't control the players, it's much more volatile. So the risk is there.
Meanwhile, Mark, on the ground in Israel, the rhetoric, the outrage continues to be that the hostages have not been brought home, that there are still hostages out there. Is there more progress on a possible ceasefire or a hostage release deal?
Well, there are talks, and they've been, quite serious. They've been going on for, some weeks now. But the U.S. has made it clear that they don't think that a deal is imminent. Both the U.S. and Israel have said that the ball is in Hamas's court because Israel has made a proposal or a counter-proposal. So we're waiting for that, but it's very obvious that there is quite a distance between the 2 sides in terms of what they need in order to see this even a 2-month ceasefire take place.
And senators reach a deal on Ukraine aid. Now, this is the US border, but we have got some hurdles in the way. So what are the details?
Yeah, so you have a deal in the Senate, but you've still got the Congress to get through, and it's not at all clear that that will be possible. The Republicans in the Senate, including the Speaker, have been quite resistant to the idea of giving aid to Ukraine, and with the suspicion that they have an eye very strongly on Donald Trump's presidential campaign. So another, quite complicated situation there.
Yep, it surely is. And obviously, Europe moving last week is a progressive move for Zelensky and the Ukraine efforts. Mark, thank you very much. Mark Champion there of Bloomberg Opinion. Quick snapshot of the commodities. As you see, you have this escalation in the attacks on the Iranian proxies, Danny. You have that US military campaign, the UK military campaign. What will the retaliation back be from the Houthi rebels? It's interesting. You see oil down again, down 0.6%. Brent under pressure. And again, this goes back to the fact that I gave you. We gave back $5 last week. Yeah. On these peace initiatives, and natural gas is up 0.7%.
We also had those huge earnings from Exxon and Chevron.
Did you see the dividend and the buybacks? They are massive, but yet they're not being rewarded to the same extent that you're seeing tech being rewarded.
Exactly. It's still all about tech. Maybe it's that oil prices keep dropping, but again, it's not hurting their profits. The other sector we got to keep our eye on, Manus. You know it is. It's the banks. It's the banks. It's more banking job cuts. SocGen cutting 900 jobs to boost capital. We'll talk about that in UniCredit here on Bloomberg Brief.
Was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time, and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart, too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this. It has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Manus Graney with Danny Berger in New York all at the same time. Let's talk banks. SocGen is planning to cut 900 jobs at its head office in France. The cuts are part of the CEO's strategy to cut costs, boost capital, and he has some lofty ambitions. Charlie Wells is on this story. So this is a new CEO with a mission to deliver cost cuts and return on equity, the holy grail of European banking. Good morning, Charlie. What's he going to do?
Look, I mean, he's really got to focus on that efficiency. And I mean, this is a really difficult problem because unlike other European banks, in France, there is a rule that has made it more difficult for banks to pass on rising rates in their lending. So that is a real challenge that we've seen in some of these French banks. BNP, which reported last week as well. And look, Société Générale has had problems over the past years. They have slashed thousands of jobs. And according to an internal poll that Bloomberg obtained, only 53% of staff in that poll said that they had confidence in management, and that is a drop from previous polling. So this is a challenge for that new CEO.
Manus, I just looked it up. We spoke to Krupa almost exactly 2 years ago.
When he was in charge of investment banking.
He was in charge of investment banking.
Brilliant line.
I'm surprised we didn't get him fired because he told us that they're planning again 2 years ago, massively raising its bonus pool for its bankers. We're in such a different place than that.
Completely. And I mean, actually, after that interview, it was like everybody got hysterically nervous because he just very naturally said, of course, he was in charge at that time. Massive bonuses. Well, those days are going to be a lot more difficult to deliver. Now, when you wear the crown, it's a whole different story.
It's so true. Going from bonuses for all to job cuts for some. And Charlie, at the same time, UniCredit surging on earnings, far exceeding expectations, something like 3 times the analyst estimate, a monster $9 billion buyback. What is Orchel doing?
Yeah, it turns out, investors like those returns. They like, that net income that, 3 times analyst expectations. And one Citigroup analyst at Soar saying that UniCredit was smashing it, that this, is the stock that is one of the most loved in the sector, but they continue to over-deliver. And how are they doing that? I mean, really, we've talked about job cuts, and let's not forget at UniCredit, there had been as well a number of job cuts in the fourth quarter, part of that efficiency drive that the CEO had really been focused on. The number was 1,350 in the fourth quarter. And so that really is showing, some of the strength that some of these European banks having, those ones that particularly have a lot of business line and geographical diversity, as opposed to other lenders. I'm thinking about ING last week, which really struggled and talked about how they need to branch beyond lending as we enter this lower rate environment.
You just sort of wonder, does Orchel call Armati and go, listen, I'm doing grand down here in Italy at the moment. You've got your hands full. Of course, Orchel came out of the head of the investment banking at UBS and went on to the whole debacle with Santander. Not that anybody out there doesn't know it. Talk to us about UBS, because Colin Kelleher, the chairman, raised the curtain on potentially raising the targets that Armati will set at the strategy day for UBS this week. The heavy lifting of integration is nearly done. Now it's about delivery.
Right, everyone is focused on this. And I mean, this is a long-term story, right? It's really difficult to integrate 2 massive banks, strategically important banks to Switzerland. And so this is very much a long-term play. And I think the question really will be, how much patience do investors have tomorrow when UBS reports its earnings? There is, some potential positivity coming out of the push into wealth management that is seen across the industry as a play that is, can weather high rates and can weather low rates. But it will really come down to how specific Armati gets in that update, and that is a 3-year plan. So again, long-term planning, but the question is how much patience there is for an integration that could take a while.
Yep, we'll get that nice and early tomorrow, those results. Charlie, thank you so much. Bloomberg's Charlie Wells. And tune in tomorrow, we're gonna have an interview with UBS CEO Sergio Armati. So Manus, I gotta tell you, I spent most of my time this weekend looking for an apartment, didn't succeed. The other thing I did was I went into an Apple store and I said, can I try on those Vision Pro goggles? They told me there was a wait list for a demo of 3 days, a 3-day wait list.
And that's $3,500 for a headset.
Yes.
And in terms of the numbers, I think we had Dan Ives send us both the data. He reckons 600,000 units for this year. But is it going to turn the dial? Is the headset going to turn the dial for Apple?
I guess it's whether it's another round of hype. Something else people can get excited about, because that's waned for the iPads, the iPhones. Here's what Dan Ives says. He thinks the answer to that question, Manus, is yes. He says, we believe Apple Vision Pro is a potential game changer over the coming years, and Cupertino has found clear success with the next generation form factor, surpassing by a wide margin original street expectations. So maybe more than just funky goggles, this is something people actually use.
But this is about the evolution and then the commoditization of a product. And if you think about when you got your first mobile phone, it was many years ago, Danny. It was a Nokia. It was like a little bit.
Little flip guy?
It was like, no, a little brick, a little Nokia brick. Of course,
those things never break, though.
They virtually don't exist anymore. Yeah, you're right. They're like cockroaches. Look, these are the apps. So it's when I say commoditization, by the way, these are the apps that are not going to be on Vision Pro. They've decided not to make an app for Vision Pro. But it is about that. You know, you remember buying your first mobile phone, it was horrendously expensive. Here we are, perhaps with an evolution of where entertainment goes. We don't you know, if I said to you, if you said to me 20 years ago, you'd be watching video on your iPhone,
I wouldn't have believed
plane,
you.
I go, nah, why would I do that? On that, no.
Yeah. Something feels really dystopian, though, about everyone sitting on a plane with goggles on.
It's dystopian, you being here. It's a whole new world. It's a whole new world, a whole new universe.
It's utopia, me being
utopia,
here, man.
Not dystopia. It's utopia, yes. Chastened on the first day.
Yeah, can you imagine if they made Vision Pro a Bloomberg app for it, that we're literally in people's living rooms? Can you imagine that? 5 a.m., we're waking you up.
Jazz hands at 5 a.m. Bloomberg brief, jazz hands and all. Let's jazz hands with a little bit of bonds because there's been a nuclear bomb go off in the bond yields. This is a reawakening of vigilantes. This is about an empowering of the bond bears. We spiked by 16 basis points at the very short end, and you are just seeing this revision to the timing on when the Fed will go. Powell on 60 Minutes saying the danger of moving too soon is that the job's not quite done. And Katrina Dudley was with us on the wages component of plus 0.6%. And that is where the risk in the marketplace is. It's about wages and having to stay higher for longer because of the strength of the consumer. So bond yields are on fire.
Right.
Lit up.
Right. And all of that strength, the consumer bond yields, has also meant that this dollar continues to strengthen. Generally out this morning saying...
You paid in dollars now.
I didn't even think about that. Does that mean you don't buy me breakfast anymore? That has to be me too? Yeah, okay. Manus actually never bought me breakfast, by the way. Anyway, here's your snapshot.
Corporate Amex card bought you breakfast.
Yeah, exactly. Bloomberg dollar spot up 1/3 of 1%. Euro sterling all weaker. The question is will this still be a difficult year for the dollar? So far, it has defied expectations with all of that strength. And you have a Powell again who says the Fed will move slower than the market expects. Okay, Manus, coming up, we got to cover some of the market moving events for you to watch throughout the week here on The Brief.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading week. Here's a look at what's ahead. U.S. PMIs, those will come out at 9:45 a.m. Eastern time this morning. Then we're going to get ISM services at 10. Then it's a host of Fed speak on deck throughout the week. We're going to get Goolsbee, Bostic today, then Messer, Kashkari, Collins, and Harker. All of those will come on Tuesday. And then we're going to get earnings from Disney, PayPal, Alibaba all on Wednesday. So, Manus, still some techie names to come. The Mag 7, for the most part, showed up, at least when it comes to Meta. Maybe some weakness elsewhere. But again, I come back to Katrina Dudley saying, get over all the hype about Mag 7. You can own the Mag 7, but you can own other parts of this market too.
Look, Mag 7 trades at about a 33% premium on a forward earnings base to the rest of the market. And to that extent, you've got to believe that that's still where you want to be. You just look at what Meta did on Friday. It was up on just under $200 billion, Danny. That usurps anything that Amazon did on its best day ever. It usurped anything that Apple did on its best day. Good run. I got to say, you've got to see a spectacular move in his studios coming from over there to over here. And it's like,
do you think the audience heard me crash into this desk just now?
You didn't crash in. You just glided.
I think I might have just bruised myself.
It was like one of those really sort of easy A380 landings that just might have had a little kink at the end.
I thought you were going to say it was like one of those Boeings where the doors blow off and they have to do an emergency landing.
I was giving her the grace and the poise of an A380 from Emirates, not a Ryanair flight going into Dublin where they just go bang down on the ground.
There's some joy in that too. Okay, let me extend the metaphor further. Will the tech stocks go bang down on the ground like a Ryanair flight if these bond yields keep going higher?
Look, the bond yields going higher are at some stage going to challenge the tech narrative, perhaps the broader tech narrative. But you look at the other side of the equation, which is Stephen Major saying this morning that you maybe want to, okay, it's the short end of the curve, which is going to maybe trouble tech.
Right.
But then at some stage, the yield hunters of the world will unite and they will return to the bond market. And they'll say, you know what, I'll pick up yield at this level.
Right.
And I say, essentially, that's what Major is saying. Buy bonds at this level because it'll outperform T-bills.
And I think another interesting part of that argument, I know Major's a bond guy, but it's this question of where does the cash go? If we're moving out of cash, does it go into this bond market or does it go into this equity market?
It depends on who you talk to. It depends on which guest you talk to.
Or some people say it's so sticky. People's money is wrapped up in a 10-year CD. They've just learned to love cash with the uncertainty of this world. Maybe it stays in cash.
Then the incremental risk is, of course, the longer you remain in cash, you look at the equity market, you look at those record after record, you look at the Mag 7, the longer you remain in cash, perhaps it's that opportunity cost. But banks are going to be very much front and center this week.
They are. They're front and center today already, Manus.
They're moving, yeah.
Let's look at UniCredit because it is up some 7% this morning. A big earnings move, although that's not UniCredit, unfortunately.
No, that is another Italian organization. Let's take that down.
I promise UniCredit's up some 7%. Earnings that beat expectations by threefold, but a different story at SocGen, Manus.
Completely different. SocGen, traveling this journey, I think, that many of the banks are, which is with the introduction of AI, layering it over the operational back office roles, Danny. 900 jobs are to go, 5% of the workforce at SocGen.
Well, maybe all the jobs are coming here to New York. Reunited again, Manus.
There you go. First day. Day one, we didn't break anything, and she glided in like an A380. That's it for Bloomberg.
What do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge.
our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
This is a very strong report and a strong labor market. The Fed doesn't have to normalize policy as quick.
There's no data there that says we are headed toward a cliff or we're going to have a sudden shift in growth.
Some signs of softening, but so far very gradual signs of softening.
This means markets off the table. It also means that you are more likely to get the 3 cuts that the Fed has signaled.
Whether it's March or May or June, I think it's in that time frame that we expect the first cut.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Farrell. Your equity market on the S&P 500, a touch softer. We're down 0.2% on the S&P 500. Starting Monday, still talking about Friday. Bramo, 353,000 reasons to talk about Friday. Chairman Powell's comments over the weekend, no different to his comments last Wednesday, but I think that data Friday turns the volume up on him just a little bit more.
Especially because a lot of the commentary over the weekend were people resetting after that data, saying, including Peter Scheer, maybe I underestimated a reacceleration in the U.S. economy. We saw from a whole host of others, this is actually incredibly bullish. And the question now is, how much does the Fed have to walk back some of the rate cutting expectations? You're certainly seeing it in the markets with now just an 18% chance of March.
So stocks had a great session on Friday, right? I just wonder how much that $200 billion market cap move of Meta just kind of flattered the stock market story a little bit. Is good news truly good news?
No, that's all I'll say. I'll answer that question because 73% of the Russell 2000 was lower. So if you take a look at the sort of gauge of the real economy, it is not reflecting that $200 billion or $197 billion increase in Meta that we saw on Friday. Also, there is an existential question. We saw the biggest jump in 2-year yields going back to March. Is this going to be unabatedly good for the broader stock market at a time where a lot of people are worried about a slowdown?
Yields up this morning by 7 basis points on a 2-year, 4.35 at the moment, 4.43 rather. This is a story for me over in China as well. So US equity markets all-time highs. In China, whipsawed again, lower than higher. Goldman Sachs and the team, AMH, writing this, the most frequently asked questions among local investors in China include implications for China should Donald Trump become the next US president. This is becoming a big deal.
It is, and he's keeping Chinese investors up at night, according to Goldman Sachs. But Jonathan, they have every reason to want to be up at night. The former president was asked about it this weekend on Fox News, about this 60% blanket tariff on Chinese imports. that was written up in the Washington Post, and he said, no, it actually is going to be more than 60% as a potential policy if he was to get elected into the White House again.
Yeah, but you got Plunge Protection Patrol, and they're coming out in full force. So on the other hand, you have on one hand the potential for 60% tariffs being thrown out there. Either way, it's going to get, the whole relationship is messy. But, they come in and they buy.
Yeah, China coming out and saying they're going to do stuff without telling us what that stuff actually is, right? They're going into the Lunar New Year holiday, and from what I hear, they don't want people talking about a stock market that's struggling.
Well, they have a long way to go. That's all I can say, because the struggle has been real. And you haven't seen any real returns since, 2015 in the stock market. So how much can they support that? How much does that do to the U.S.-Chinese relationship, and how much does that do to something a little bit deeper that they need to deal with?
What does the plunge protection team actually achieve? They address the symptoms and not the illness. And when we're talking about higher tariffs, maybe more than 60% in the United States, we're talking about that illness getting a whole lot worse, aren't we?
Just to put some numbers on this, $7 trillion has been erased from the value of equities in China and Hong Kong since the peak in 2021. Is this because of the issue with the U.S. and China? Is this because of the response to the pandemic? Is this because households aren't spending? Is this because of the real estate issue? Yes, is the answer. So how do they really grapple with this? For now, Plunge Protection Patrol.
I think you're being kind. That list is a whole lot longer. Chinese equities at multi-year lows. Equities in America at all-time highs. Your equity market right now, S&P 500 futures pulling back by 0.2%. As Lisa mentioned, yields are higher on a 10-year by 6 basis points, north of 4% again on a 2-year by 7 to 4.43, call it 4.44. In the FX market, Lisa, a touch of dollar strength here. The euro weaker, a break of 108, 107.47.
And we'll be talking about how the U.S. has really led the economic outlook. At what point is good news, but really ultimately this comes down to, can the Fed cut rates truly as much as people previously expected? And oh yeah, by the way, maybe the ECB truly will cut first.
Coming up on this programme, no conversations about G10 foreign exchange. Brammer will go to sleep. Laurie Calvasina of RBC Capital Markets on the equity market rally. Norman Rule, former senior U.S. intelligence official on U.S. strikes in the Middle East. And Terry Haynes of Pangea Policy on the latest steps to secure the southern border. We begin with our top story this morning. Stocks posting fresh all-time highs on the heels of a blowout jobs report. Laurie Calvasina of RBC Capital Markets saying this. A slightly better inflation outlook has caused our valuation model to get a little bit more constructive. It implies that the S&P 500 could move to 5,500 at year-end 2024. Laurie, I'm pleased to say, joins us now for more. Laurie, great to catch up and fantastic to kick off a trading week with you. Can we start on Friday, and can we ask you, does that jobs report derail this soft landing story?
Well, thanks for having me as always, John. And I don't think it derails anything at all. I'll give our rates team a lot of credit. They've been looking all along for the Fed to start cutting in June because they simply didn't think that the data was going to cooperate before then. They didn't think we were going to see any kind of big erosion in the underlying U.S. economy, either from the labor market side. And they've always thought this would be about adjustment cuts. So from our perspective, things are really playing out as our rates team had anticipated.
Meanwhile, Julian Emanuel, our resident worrier out of BTIG, came out over the week, or excuse me, Evercore ISI, came out over the weekend and said, what could derail Goldilocks? Slowing growth, sticky inflation, and extended valuations. Valuations in particular from these levels point to weak forward returns. Why do you disagree?
So we look at valuation very, very differently. I think what a lot of my peers in the strategy community do is they say, hey, here's what the multiple is. Here's what the long-term average is over some various point in time. And they make some assumption, right, about where it should be and if it's too high or too low. We've actually built a completely different model where we go back to the 1960s. We look at trailing average S&P PE data, and we've built a model that takes into account the relationship of that PE multiple with inflation, with interest rates, with Fed funds, and with GDP. And when you take in consensus assumptions about where all those macro variables are headed, it's basically telling us we can find a trailing PE of around 23 times and a half at the end of this year. And if you marry that up with my earnings number of 234, it points you to something quite robust at the end of the year in the market. And I'll tell you, Lisa, we've used this model for about a year and a half, maybe a little bit longer than that. Last year was the first year we really did use it for the full year, and it was consistently pointing us to kind of a 21 to 22 times trailing PE at the end of the year, and an S&P that could end the year at 4,700 to 4,800. Unfortunately, I didn't listen to that model enough. My target was too low, but it was telling us to really challenge the assumptions of where people think PE should be, and that a higher multiple is possible given an improvement in the economy, given the big moderation in inflation, and that interest rates, while they're a dampener, aren't really able to offset that big moderation in inflation that we're seeing.
How distorted are models based on the Magnificent Seven, or the Magnificent Four, I should say, or maybe just Meta?
So I do think that the impact of those big names matter, but what I love about our model is that it actually captures the 1970s when we went through the Nifty 50 period. And so we do also have the 2000 period baked in as well. And yes, we are very stretched in terms of the concentration in the market, but we actually think that's one of the benefits of our model is that we are taking into account these prior periods when you had some concentration. Frankly, Lisa, I think a lot of people are using post-GFC timeframes to do their valuation work, and we really need to be looking at multiple cycles to figure out what rules of thumb we should be looking for. I strongly believe we're early in the post-COVID era of investing, and we don't quite know what all these rules of thumb are. You can learn from history, but you've got to look at a lot of different cycles to understand what those rules of thumb might be.
Laurie, I'm so pleased that Lisa brought up Meta. Can we just sit on that for a second? The biggest increase, single-day increase in market cap ever in the history of US markets, almost $200 billion. Laurie, what's your takeaway from headlines like that on Friday?
So I think it's been an interesting reporting season. I can't talk about any name in particular, but one of the things that we've seen coming into this reporting season, and the data still endures, is that if you look at forward-looking growth expectations for the kind of top 7 names in the market, the earnings growth advantage of those top 7 relative to the rest of the market is expected to endure, but it is also expected to shrink. And I'm not quite sure what investors are going to be paying more attention to going forward, the dominance or the fact that the dominant are becoming somewhat less dominant. And we've seen things kind of get back and forth in terms of sentiment on the top 7 names over the last week as we've seen different companies report. So I think it's still TBD, but I do see a lot of data in my work suggesting that this market is ready to rotate and wants to rotate. I think what's really missing is that we need more excitement about the underlying economic environment to kind of boost the earnings growth expectation of the names outside of the top 7.
Well, Friday should contribute to that, that's for sure. Laurie, you can't do single names, you can do sectors. What are the sector preferences now?
So we're leaning into things like financials. We like energy. We like healthcare. We like utilities. We have said, though, that on the big growth sectors, we don't want to go underweight. We are neutral technology, comm services, consumer discretionary as well. I would tell you that communication services, where some of these big internet names are sitting, was making a much stronger valuation case for us on our model about, say, 3 months ago than it is today. So we're still neutral there, but the valuation work's just not flagging as positive as it was a few months ago.
One of those stood out more than the others, energy. How can you get bullish on energy at a time where it seems like U.S. supply has completely overwhelmed any geopolitical risk and prices have dropped even with the hang-up of what's going on over in the Red Sea?
So I would honestly tell you, Lisa, it's a close call. Our analysts are still highly bullish. We still like the valuation dynamics. And frankly, I look at it as a little bit of a hedge in my portfolio. So a lot of the areas that we're looking at are things like financials, right, which should benefit if we continue to see consumer confidence recover. Energy obviously is an area that doesn't do well when that happens. It's also an area, frankly, that doesn't do as well when interest rates are rising or when interest rates are falling, rather. So we really view it as kind of a hedge on the idea that inflation is moderating, interest rates are going to give us a little bit of relief. We think that any call in the market these days, frankly, has about a 60% conviction level, and we like having a couple of these areas that are a little bit counter consensus on the macro narrative in the back pocket of our portfolio.
I think that final point resonated with us all. Laurie, thank you. Laurie Calvasina of RBC. Low conviction calls at their Bramo at the moment. Lisa went to energy. Let's just sit on crude for a moment. Brent crude down 0.5%. Down 0.6 on WTI. WTI 71.82, Brent crude 76.98. We had strikes on Friday. AMH, we had the retaliation that we've been waiting for, and crude is down on Monday morning.
When I see this geopolitical environment and then I look at the screen and see that Brent and WTI are actually lower Monday morning, you have to think, how much lower would crude actually be if there wasn't geopolitical tension right now in the Middle East? How low could these prices actually have been? Because some of that risk is actually priced in.
What's your read on this? Do you just think this is about the market drawing a conclusion that this White House does not want broader conflict and is going out of their way to ensure we won't get one?
I think there's two things. The United States does not want an escalation of broader conflict. They're doing everything they can to stop it on a diplomatic front and also trying to degrade the Iranian proxies' abilities. Also, Lisa brought this up, 13.2 million barrels a day the United States has. This is a record any country has ever set. On top of that, China is still getting oil and gas from Russia. Russia is still on the market. Iran is still exporting. Venezuela has some crude on the market. So their adversaries against the United States that actually have crude on the market, on top of the fact that the U.S. is the whale in the U.S. crude market. It's the little-known secret in Washington that the White House just doesn't want to talk about.
I do wonder, though, if people just aren't paying attention because it's the widowmaker trade. Anytime someone tries to bet on oil, it's failed. At a certain point, there were a couple of models I was reading over the weekend that if this did erupt and Iranian oil was taken off the market, prices would probably go to $90 a barrel.
I think you're right, conditioned by recent experience, that's for sure, over the last few months. 71.81 on WTI. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Former President Donald Trump says he might impose a flat tariff on Chinese goods of more than 60% if elected. The comments signal an increasingly hawkish tone against the top supplier of goods to the U.S. Trump rejected criticism that actions would start a trade war. The U.S. has been China's biggest export market for more than 20 years, including over $500 billion in exports in 2022. Boeing is lower in pre-market trading after the aircraft maker revealed it found more mistakes with holes drilled in the fuselage of its 737 MAX jets. The latest manufacturing slip originated with a supplier and will require repairs on about 50 undelivered jets and may delay plane deliveries in the near term. The defect follows a string of manufacturing lapses at Boeing, prompting the FAA to step up scrutiny of the company. Canada extended its ban on foreign home buyers for another 2 years, with the measure now set to expire in 2027. The country's real estate market has started heating up recently as it becomes clear the Bank of Canada may be in a position to cut interest rates later this year. The national home price average in Canada has jumped 36% in the past 5 years. That's your Bloomberg Brief. John?
Yahara, thank you. Ramo, you know this. The housing market in Canada is like a microwave. I've heard that before. The heat turns up so quickly, just the mere talk of reducing interest rates over there.
Well, and this comes at a time when that is a much more interest rate vulnerable sector than in the United States. This still is a big question. We haven't resolved the sort of small banking, commercial real estate, all of that in any way, and we haven't really resolved whether this is a long and variable lags, having the housing market kind of on tenterhooks, and whether actually more volume could cause prices to go down.
We'll talk about the financials a little bit later on the program this morning. Up next on this program, the White House promising more strikes in the Middle East.
So the president has been very clear from the beginning, which is that when American forces are attacked, we will respond. It began with the strikes on Friday night, but that is not the end of it.
That's coming up next on the program, live from New York City this morning. Good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rates.
World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
Live from New York City, equities lower this morning by 0.2% on the S&P 500. Kind of weird that yields are up on Chairman Powell. If you think yields are up on Chairman Powell, we're up 6 basis points on a 10-year, up more on a 2-year. Lisa, 4.08% on a 10-year. Nothing new in those comments over the weekend. But as we said at the top of the program, I guess maybe the jobs number Friday just turns the volume up on him a little bit more.
My take was there was a school of thought that he made a mistake in the press conference and just kind of said, March is not on the table that much. It's not likely, And basically the fact that he thought it through and really put out there why March is not likely sort of codified and made it seem like it was not an accident. It was very deliberate that he said that at the press conference last week.
Jobs on Friday screamed March is not likely, right?
Correct.
So we've cleared that up for now.
Well, the data definitely seems to confirm, but we get a slew of Fed speak this week, so they can all confirm that as well.
Looking forward to that. We'll go through the speakers a little bit later. Under surveillance this morning, the White House promising more strikes in the Middle East.
So the president has been very clear from the beginning, which is that when American forces are attacked, we will respond. It began with the strikes on Friday night, but that is not the end of it. The president is determined to respond forcefully to attacks on our people. The president also is not looking for a wider war in the Middle East.
Here's the latest this morning. The White House promising it will take just enough action against Iran to send a forceful message while avoiding a wider war. Officials framing U.S. strikes over the weekend as a necessary and inevitable response to the killing of 3 U.S. soldiers in a drone strike in Jordan a week ago. Joining us now is Norman Rule, Senior Non-Resident Advisors for the Transnational Threats Project at CSIS and former U.S. Senior Intelligence Official. Norman, great to catch up with you, sir. Let's just start with the strikes that started on Friday evening. What have the latest strikes achieved that previous strikes didn't?
Well, these strikes, and good morning, these strikes destroyed a series of command, control, and intelligence centers that were important to the militants targeting U.S. forces in the region. They destroyed a large amount of stockpiles of missiles, rockets, and killed a small number of mid-level and low-level militant officials. They demonstrated also the accuracy, sophistication, and skill of U.S. long-range air assets, which in itself is a message to Iran.
Norman, over the weekend, we also heard from Jake Sullivan talking about almost 2 different strategies. He said this is not going to be the end of our response. There will be more steps. It's going to send a clear message, and it'll be a sustained way. And in the same breath, he said, I would not describe it as some open-ended military campaign. What is the strategy?
Well, the strategy appears to be we respond to the actions and the capacity of our adversaries. So in essence, what you're going to see is a heavy intelligence-driven program. For example, in Yemen, we're now striking missiles on the ground and drones on the ground as they prepare to take off. I would expect to see something similar in Syria and Western Iraq. Now, the proxies are going to hold back in the near term other than symbolic attacks because they don't really know what the U.S. is going to do. But as they ramp up their attacks, and as evidence appears to this, I think you'll see the U.S. respond to protect its forces.
So in what bucket is this? Degrading, deterring, or defense when it comes to the U.S. response on Iranian proxies?
It's primarily defense. It's aimed at degrading, but we should be clear. We are not touching equities, assets, or personnel that are significant to the senior-most leadership in Iran or in the proxy world. There are reports that a number of Afghan militants were killed in Syria. The Iranians created an Afghan militant unit, but the loss of these individuals is not going to shape Iran or proxy regional strategies. Again, they're going to wait and see where we go. We're going to wait and see where they go.
Norman, how much more vulnerable are U.S. troops right now stationed in Iraq, stationed in Syria, stationed throughout, frankly, the Middle East?
I think we've demonstrated over the past couple of years that the U.S. has an extraordinarily sophisticated capacity to defend its personnel from missile, drone, and rocket attacks. We're seeing that from Yemen to Iraq and elsewhere. But mistakes happen. A missile will get through. This is a very high threat environment. We shouldn't downplay that. But we have considerable defensive capacity. And again, we've seen this displayed over and over again as we put off these attacks. The problem is defense is not deterrence. It just tells your adversary to keep trying until he gets one through.
So what's the effective policy to actually try to end the Houthi attacks, to try to end some of the 160-plus attacks on the American bases in the region?
Well, for the Houthis, we have to do 2 things. We have to destroy as much as possible their missile, and drone capacity on the ground. That will prevent attacks to shipping. We also have to make sure they never develop a capacity to touch the underground sea cables that handle most of the internet traffic between Europe and Asia that go through the Bab el-Mandab. And I think our Navy will take care of those two tasks. In the north, our Air Force will be working to identify and degrade capacity as appears to be a threat. I don't see this moving to a U.S.-Iran confrontation, but as Iranian actors return to the area, it's not inconceivable that Iranians will be killed in the U.S. responses.
Norman, many analysts on Wall Street have been surprised by how calm things have been in the commodity markets. Some of them are pointing to what happened back in 2019 when Houthi militants managed to take out a chunk of Saudi oil production. Where does Saudi Arabia fit in to this current tension?
Well, first, we have a vast amount of the energy and commodity market being rerouted. It's not been halted anywhere. Saudi Arabia also has its east-west pipeline that crosses the peninsula that's able to deliver a fair amount of oil. And last, you have a rather robust trucking industry that's able to take commodities that are dropped off in the Emirates and ship them northwest up through Jordan to Aqaba and the Mediterranean. I think you're watching the importance of geography, and you're also watching why eventually relations with Israel are going to be so important for the kingdom and the region, because that geography provides you with an alternative land route to get around Red Sea interdictions. I don't see any significant changes in that dynamic. Again, if I had a big worry in the world, it's the internet being cut in the Red Sea, but steps are being done to protect that. But more important, I think we're going to see continued disruption and slowness with some of the commodity and energy shipments through the area.
Norman, what kind of campaign response could we see this week specifically with Secretary Blinken actually in the region?
Well, the secretary is going to aim for several things. First, he's going to look for continued humanitarian shipments and expanding those into Gaza. He's going to look for anything that can be done to increase the likelihood of hostage releases and a ceasefire. And that would satisfy our requirements, Arab demands, and give return Israel its people who are being taken, have been taken hostage. At the same time, we don't really have a lot of progress in terms of what do you do with Hamas. They refuse to leave. They want to stay in charge. Imagine a two-state solution where Hamas runs the Palestinian state. Imagine what that would mean for Jordanian security, let alone Israeli, Saudi, Egyptian, or other security. You would have a Lebanon, a failed state in that area. This is all being worked through. It's a very complicated series of conversations, and I think this is going to take a lot longer than many people believe.
I've got so many questions after this conversation. Norman, thank you, sir, for your insight. Norman Rule, their former senior U.S. intelligence official. Lisa, I know where you want to go.
I know where you want to go.
Internet cables between Asia and Europe.
Where did this come from? I mean, we haven't even been talking about this, but that the internet lines might be cut between Asia and Europe. It just shows all the things that we haven't even really thought about in this conflict and how crucial this one area is to trade and to just international relations.
The calm around energy is truly impressive over the last, how many months is it now? 3?
Yeah, but but he said it's not going to really be an issue. So maybe this is what people are factoring in, or I don't know.
Amazing. Crude lower again this morning. Coming up on this program, Claire Lombardelli, OECD chief economist, on their outlook for global growth and a whole lot more. From New York City, this is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Live from New York City, equity futures negative here on the S&P 500. On the Nasdaq too, we're down just a touch by 0.2%. On the Nasdaq, we're down by 0.1. Coming off the back of 4 weeks of gains on the S&P 500, all-time high at a close on Friday. In the bond market, yields higher at the front end, right the way through the curve. 2s out to 30s. The 2-year up by 7 basis points. The 10-year up by 6, 4.0771%. Really weird week last week in the bond market. The reason I say that is because if you go to Wednesday's price action, you'll notice that yields moved lower even though Chairman Powell pushed back. And ultimately, Bramo, it wasn't just about the Fed and data last week. It was about bank tension too.
People were thinking that maybe you'd get some sort of resurgence in concerns about smaller banks, about commercial real estate, and that would cause some sort of shift or acceleration in the Fed stance. You know, Jay Powell pushed back against that, though, over the weekend. This is sort of one of the less talked about aspects of his speech or his discussion on 60 Minutes. He basically said, it's not a systemic issue. Maybe some smaller banks are going to fail. That's what we do. We oversee things. Move on.
We can move on to the next asset class, foreign exchange, if you wish.
This is great.
Take the bond market, highly intuitive stuff. Yields up, push it through foreign exchange, dollar stronger, euro negative. Right now, euro dollar 107.56. We're down by about 0.3% on that currency pair. Under surveillance this morning, Fed Chair Jay Powell saying the central bank will look for more economic data to confirm that inflation is indeed heading back to 2%. In an interview on 60 Minutes with CBS, Powell reiterating his stance that a March rate cut is unlikely, saying, quote, the danger of moving too soon is that the job's not quite done, and that the really good readings we've had for the last 6 months somehow turn out not to be a true indicator of where inflation's heading. Bramo, we talked about this Wednesday, the discomfort just around that story for him and the committee.
Especially given the fact that, A, they got it wrong when it came to the surge in inflation, but B, the data has been almost too good, right? I mean, we heard this over the weekend. I saw what we saw Peter Scheer over at Academy Securities put it this way. This is the first time in months that I've felt the need to step back and see if I'm not giving the economy enough credit. I certainly wasn't betting on escalation and expansion. He's not alone. How do you factor in the fact that the Citi U.S. Economic Surprise Index is at the highest level going back to November?
That's nuts, right?
I mean, then what are we looking at here? People are trying to get their head around this.
I was going through all the Southside research yesterday. You mentioned Peter Scheer. Simply stunning jobs report. Mike Gape and Bank of America, blowout report. Citi's Andrew Holdenhorst, so much for the soft landing. I thought of Max Kettner of HSBC, and I went back to his note in early January. The biggest risk is not from a sudden deterioration in earnings activity, but another repricing in rates. Got a repricing in rates last week.
And it didn't seem to affect the overall index level because of Meta. And so now we have to wonder whether it can also be everything other than Meta. And that's really going to be the key question.
You were right to look elsewhere in the equity market, away from mega cap tech, look towards the small caps. Is good news truly going to be good news if it leads to that repricing that we saw?
The answer was no. I mean, really, just you can't really argue with that. When 73% of the Russell 2000, 73% of those names were lower.
Let's head down to Washington and get you up to speed on this story. Senators releasing a bipartisan deal to impose new immigration restrictions and unlock billions of dollars in Ukraine aid. With the bill set for a vote on Wednesday, it's likely to face bigger hurdles in the House, where many Republicans oppose it, with Speaker Mike Johnson calling it, quote, dead on arrival. MH, that begs the question, is it truly dead on arrival?
Well, I think it remains to be seen, because there are going to be Republicans who look at this and are saying, wow, we've been discussing immigration policy and provisions for decades, and finally there's an encompassing bill, and this bill has something in it for everything. It's $118 billion on the top line, $60 billion for Ukraine, $20 billion for the border. That's $6 billion more than Biden even asked for, and then $10 billion for Israel. But the issue is it's an election year, and it's not just the fact that you have policy issues that some Republicans don't want to vote on this for. They don't think it goes hard enough on the border, but you have the former president breathing down their neck not to give Joe Biden a win.
This is what people hate about politics, Lisa. This right here. Is this dead on arrival because of substance policy, to your point, or dead on arrival because they want to preserve the issue for the former president to run on this campaign season?
How do you parse the two, right? I mean, it's dead on arrival because, yes. I mean, basically, you've got people who are disagreeing. You've got civil war within the GOP. You've got civil war within the Democrats who think that it's too hard. Honestly, you look at this and you think, what is the path to getting it done? Mike Johnson, who, by the way, people are questioning whether he can really remain in that position as House Speaker at a time where he's trying to wrangle cats.
Yeah, he is wrangling cats when it comes to the House GOP caucus. Also, we have to remember, they're putting their own bill on the floor this week for a clean Israel deal. So there's going to be a lot of, twist and tangling that's going on in Congress.
Lisa, keep it together. Let's get to Caterpillar earnings. Fourth quarter adjusted EPS just out from Caterpillar. We'll run through the top line, bottom line for you. EPS 523, the estimate 473. So there's an upside surprise for you. Revenue coming in basically in line, 17.1 billion US, Lisa, the estimate 17.2.
Again, though, this goes to the question of what's going to go to what? The service sector, is it going to come down to manufacturing or manufacturing going up to services? Caterpillar, the bellwether on farm equipment, on construction, showing better than expected earnings per share going forward, really highlights just how much you're seeing a resurgence in some of the laggard industries.
Stock is up by almost 1% in the pre-market. We'll try and come back to that in the next hour or so. I want to finish on this story. Let's get straight to it. New Jersey, yes, New Jersey, winning the rights to host the FIFA World Cup final in 2026. MetLife Stadium beating bids from Dallas and Los Angeles for the showpiece match. 103 matches will precede the MetLife Stadium final, with the tournament set to be the first to feature 48 teams. Dallas and Atlanta will host semi-finals, while matches will also take place in Mexico and Canada. We are all excited for this around the table. There was some controversy yesterday about it being referred to as New York.
It's the New York, greater New York area.
New York City, greater area,
yeah.
something like that.
If you're trying to attract an international audience, no offense to anyone from New Jersey, but
here we go.
Are you going to say, do you want to go visit New Jersey for the FIFA World Cup final or New York City? You're going to say New York City. It's Sunday, July 19th, so I'm requesting July 20th off.
Yeah, and you have like $20,000 to pay for it. I mean, seriously, how much are these tickets going to
Well, let's try and work it out. So the Super Bowl, how many people watch that on TV? A little bit more than 100 million? 110, 120, something like that. 1.5 billion for the World Cup final, according to FIFA for 2022. So I imagine these tickets. New York City to watch sport is expensive. We all know that. I cannot imagine how much it's going to cost to watch the World Cup final.
There was a member of the household who asked for a graduation present.
Oh, right,
and I just soundly rejected that. Just want to throw that out there.
Technically, just to be kind to New Jersey, East Rutherford is considered a suburb of New York City, right?
Yeah, it's the greater New York area.
So it kind of counts as New York. Plus, I will say this, I think FIFA can't refer to it as the MetLife Stadium, so I think it has to be the New York, New Jersey Stadium. Governor Murphy will be happy because, remember, he was the ambassador to Germany all those years ago. And if I remember rightly, I think he's a Borussia Dortmund fan. I think he's a genuine football fan.
I love how you know all politicians' sporting teams as well.
He told me once, and I'm trying to remember which team it was. So if that's not right, Governor, please correct me and we'll correct that on air for you a little bit later. Let's get to this. The OECD projecting global growth to ease this year to 2.9%, down from 3.1% last year, writing this. Recent indicators point to some moderation of growth, with the effects of tighter financial conditions continuing to appear in credit and housing markets and global trade remaining subdued. I'm pleased to say that alongside us is Claire Lombardelli, Chief Economist at the OECD. Claire, let's get straight to the growth outlook, and thanks for being